Hello students, today we are going to start with our next head of income, that is income from salary. Income from salary is basically given under chapter number 4 under unit number 1 of the ICS study material on page number 4.2. If you don't have the physical copy of the ICS study material, don't worry, you can download this PDF from the ICS website. But if you don't know how to download the PDF from the ICS website, don't worry, the link for this PDF is given in the description below. Okay, let's come back to our notes. The notes that you are seeing right now on your screens are also available for download. The notes are available in the Telegram group. The link for the Telegram group is given in the description below. From there you can download the notes. Okay, so the strategy for income from salary chapter is that we will study this income from salary chapter from the format book first. This is our format book, and then as and when needed we will come to the notes. Okay, so the strategy that we were earlier using in the previous chapter was we used to study the notes, these notes first, and then we used to see the format book in order to see the presentation. But since the income from salary chapter is a format based chapter, it is quite ideal to start this chapter from the format book itself. Okay, so in this format book, all the sections as well as the provisions for this section as well as the presentation that has to be made in the exam in order to get full marks is given in this format book. Okay, the format book runs into the 11 page for this chapter. Okay, after studying all these 11 pages, you will come to know that this 11 page are sufficient enough for your exam and last day revision. I hope this is quite clear. So before understanding this table, let's understand income from salary in layman terms. Okay, so understand that this is our assessee. Okay, this assessee got a job in a Reliance Industries company. Okay, so Reliance Industries company will provide the assessee, that is our employee, with the salary. Okay, so is the salary only a benefit that is received by this employee when he gets employed? The answer is no. So let's understand what all benefits the assessee, that means our employee, gets when he is employed. Okay, so the assessee, that means our employee, gets the following benefits: during employment benefits, and post employment benefits. Under this during employment benefit, it is further divided into three categories, that is salary, arrears, that is outstanding or prepaid, and the last category is non-monetary benefits. Okay, so when an employee gets employed under an employer, the employer discloses the employee how much salary that employee will receive. Okay, so the salary that the employee is going to receive, it can be in a form of basic salary, or it can be in a form of bonus, or it can be in a form of commission, or it can be in a form of allowances, or there is a possibility that the salary that the employee is going to receive will include all these four components, and finally it will form a total salary of an employee. I hope this is quite clear. So basically the salary details are mentioned by the employer in the appointment letter. Okay, but the bifurcation of the salary that the employee is going to receive is given in a salary schedule. Okay, so the bifurcation of the salary that the employee is going to receive is given in the salary schedule. Okay, so we need to analyze the salary schedule in order to identify how the salary is received by the employee. Okay, in how many parts the salary is divided, and finally the total salary has been derived to our employee. Okay, I hope this is quite clear, and which all of these line items we have to take in the computation of the income of this employee, that is the salary income of this employee. I hope this is quite clear. So the next benefit received by the employee during his employment is arrears, that is outstanding or prepaid. So there is a possibility that the employee can receive an outstanding salary, that is the earlier period salary during the current period, or an advance salary, that is a prepaid salary. So how this particular things will be taxable under income from salary, that we will study under this chapter. Okay, so the third category is non-monetary benefit. What is this non-monetary benefit? Non-monetary benefit is a benefit received by the employer during his employment period. I hope this is quite clear. So the non-monetary benefits are car facility, house facility, etc. And many facilities are given by the employer to the employee during his employment period. So there is a possibility that this all non-monetary benefits are not mentioned in the appointment letter, and it is not disclosed in the salary schedule also. I hope this is quite clear. So what we have to do in this income from salary chapter, we have to identify this non-monetary benefit, and we have to calculate the monetary, we have to calculate what the monetary value of such non-monetary benefit, and we have to include such value in our income from salaries calculation. I hope this is quite clear to you. So I'm just giving you an overview. Any which ways, everything is written in this format. Okay, we have to just read it, but the overview is quite important. Okay, and then the second category of the employee receiving the benefit from the employer is post-employment benefit. Okay, what is this post-employment benefit? Post-employment benefits are like pension, gratuity, medical facilities given by the employer even after the retirement, or even after the termination of the employment given by the employer to the employee. I hope this is quite clear to you all. So this all post-employment benefits may not be or may be given in the appointment letter. Okay, so we have to calculate these benefits also, and we have to consider it in the calculation of income from salary. I hope this is quite clear. So just for your understanding, when an employee is there, out of these two categories, any one category is possible, because if an SSC is employed, then he is not 100%. So there is, so understand this. This is a quite so understand this. It is quite a common sense that if an employee is employed, then he will fall under this category, and he will not fall under this category. I hope this is quite clear. But if the employee has completed his employment, okay, that means he has completed a certain period of time in a company and he has got retired, then he will not receive any of this benefit. He will receive only post-employment benefits. I hope this is quite clear to you. Maybe there is a possibility that in the post-employment benefit also, this non-monetary benefits are also received by this employee. Okay, so how we will calculate all such non-monetary benefits and the post-employment benefit, that is all we are going to study in this income from salary chapter. And we will also study few of the benefits given by the employer, okay, given by the employer to the employee, and such benefit will be exempt under section 10, that is exemption. I hope you remember under section 10 is about exemptions only. I hope this is quite clear to you all. Okay, if you want to copy this, you can copy this chart. Okay, please pause the video and copy this chart. I hope you all have copied this. Now let's move back to our format. The format for income from salary starts in this manner: name of the assessee, residency status of the assessee, assessment year, previous year, and then computation of the income from salary. Okay, the table given below will help us to calculate the gross salary of the assessee, that is our employee, and from this gross salary there are deductions allowed under section 16 under 3 subsection. After these deductions are deducted from this gross salary, we will find out our income from salary, and the income from the salary will be taken into the total income of the assessee, and on this total income the tax will be calculated. I hope this is quite clear to you all. So let's understand all the different line items that will form part for computation of income from salary. The first is basic salary, second is commission, third is bonus, fourth is allowances. This is what we have studied in the during employment benefits given by the employer to the employee. I hope this is quite clear. Then the next point is taxable purposes, leave travel concession, gratuity, uncomputed pension, computed pension, leave encashment, retrenchment compensation, voluntary retirement compensation, medical facilities, professional tax paid by the employer, employer's provident fund contribution, arrears of salary, advance salary. Okay, so basically from point number 5 to point number 17, the post-employment benefits as well as during employment benefits which are in a form of non-monetary benefits. Okay, non-monetary benefits are given from point number 5 to point number 17. I hope this is quite clear to you all. Okay. After reading all these line items given in the particulars in the computation of the income from salary, now let's understand each of this line item in detail, that how such line items will be taxable and how such exemption can be available for the particular line item. Before understanding all this line item, I want to explain you all a section, that is section 15 given in our notes. It is a charging section. So what does this section 15 says? Section 15 says salary is chargeable either on due basis or on receipt basis, whichever is earlier. Okay. And second point in this section 15 says that if a salary is paid in advance, it will be taxable in the year of the receipt. And the third point in this section says that arrears of the salary, that means outstanding of the salary received by the assessee, and such salary was earlier chargeable to tax on the due basis, that is as per point number 1, then in the year of receipt of such arrears of the salary, it will not be taxable in the year of actual receipt. So I hope you all have not understood a single word from this section. Bear reading. So let's understand it with an example. So let's come to a blank page. Let's understand that this is our assessee. Okay, this assessee is employed. Okay, and the company has specified in the appointment letter / contract that the company will pay the assessee on the 30th day of the month. Okay, what they will pay? His salary. I hope this is quite clear. So basically, what does due basis means? So here I have written due basis. What does due basis means? Due basis simply means that the date specified by the company on which the company will pay the assessee. So basically the 30th day of the month is the due date of receiving the salary. But understand this, if a company has paid salary for month of March 2020 to our assessee, that is the employee of the company, on the 4th of April 2020, that is in the next month. Okay, so the due date, okay, that is the due date, or we can say it as due basis date is 30th March. That means by 30th March the salary should have been received by the employee, or the actual receipt date. The actual receipt date is 4th April 2020. So whichever will be earlier of these two dates, that is the 30th March. Okay, that is the 30th March will be considered as the actual date of receiving the salary, irrespective we have received the salary actually on 4th April 2020. So income tax has specifically cleared that if an assessee, okay, is receiving a salary, then the company will give a due date, that is the date on which the company will pay. But if a salary for certain reasons receives the salary either of these 2 days, that is either on the due date or on the receipt date, so whichever will be earlier of these two will be considered as the date on which the salary has been received. So that means in our case over here, it will be considered that the actual salary has been received on 30th March 2020. So basically why this provision was brought into picture? The provision was brought into picture because many of the times employees were asking the company to shift their 1 month salary to the next date, that is next previous year. So by doing this, the salary of the March will not be taxable in the previous year 2019-20. I hope this is quite clear. So in order to avoid all these practices, section 15 came into picture, which says that salary will be chargeable either on due basis or on receipt basis, whichever is earlier. So that means even if the salary is received actually on the 4th April, the amount of the salary received on the 4th April will be considered as the salary has been received on 30th March 2020, that is in the previous year 2019-20. I hope this is quite clear to you all. Okay. So the next point in this section 15 says that if a salary is paid in advance, it will be taxable in the year of receipt. So similarly apply this formula only. if a particular due date is given to a particular SCC, that means our employee. Okay, so understand it with an example. If the employee wants the advance salary for month of April 2020 in the month of March 2020, then when will this advance salary taxable? So let's apply our formula. Our formula is the due date and the receipt date. Okay, so let's assume that the due date for the April 2020 was the 30th April, okay, of receiving the salary, and actually this salary of April month was received in March, that is on 28th March 2020. So whichever is earlier of this two date, that is 20th March, will be considered as the date in which the salary is actually received. I hope this is quite clear. And the salary of the April 2020 will be taxable in the year, that is previous year 2019-20. I hope this is quite clear. So this is what this point number 2 in section 15 is talking about. If a salary is paid in advance by the employer to the employee, it will be taxable in the year of the receipt. I hope this is quite clear to you all. And the next point says that arrears of the salary. Arrears means outstanding of the salary received by the assessee, and such salary was earlier chargeable to tax on due basis, then in the year of receipt of such arrears of the salary will not be taxable in the year of actual receipt. So basically this case only, understand that the actual date of receiving the salary was 30th March 2020, but since it is paid on 4th April, it will be considered as the March month salary, that is March 2020 salary which is outstanding has been received in the month of April. So in which month it will be taxable? It will be taxable either on due basis or on the receipt basis. So similarly we have seen that this March month salary, even if received in April, it will be taxable in the previous year 2019-20 only. So that is what this point is saying. But the actual crux of this point is the arrears of the salary received by the assessee, and such salary was earlier chargeable to tax on due basis. What if the salary was not earlier charged to the tax on due basis? This formula did not apply. So when this particular sections point 1 will not be applicable, this particular point will not be applicable when there is a dispute between the employer and the employee. Okay, so then there is a possibility that the employer is holding the salary of the employee. Okay, and so after there is a resolution, okay, there is a resolution of the dispute, the employer will pay the employee his salary. So if this employer is paying the employee the arrears of the salary which was not earlier chargeable to tax on due basis, okay, since there was a dispute, okay, so there is an exception for this point 1, that if a dispute is there, so then due basis and receipt basis will not be considered. Okay, so basically there is a contingency that whether the salary will be received or not, and taxing such salary on due basis will be a very wrong thing on the assessee, and it will cause a burden on the assessee. I hope this is quite clear. So the exception for this point 1 is dispute. So if there is a dispute between the employer and the employee, then the arrears, that is the outstanding salary, will not be chargeable to tax in the year of the actual salary, that is the due basis salary. So that is what this point is saying, and such salary was earlier chargeable to tax on due basis. But what if such salary was not chargeable to tax on due basis because of the dispute? Then it will be chargeable in the year in which it is actually received. I hope this is quite clear to you all. Okay, so by now section 15 must have synced in your brain. So let's revise this section. Section 15 says that salary is chargeable either on due basis or on receipt basis, whichever is earlier. So kindly note this, many of the CA finance students even don't know this first point. Okay, they don't know that the salary is chargeable on due basis or on receipt basis, because I have seen few of the CA finance students, they are not aware of this concept and they don't even know this section number 15, that is the charging section for income from salary head. I hope this is quite clear. And the second point in section 15 says that if the salary is paid in advance, it will be taxable in the year of the receipt. This is also quite self-explanatory. The next point in section 15 says that arrears of the salary received by the assessee and such salary was earlier chargeable to tax on due basis, then in the year of receipt of such arrears of the salary, it will not be taxable in the year of actual receipt. I hope this is quite clear to you all. Okay, so let's move back to our format. Okay, so in this format, we have studied all these line items, okay, but we have not studied all the line items in detail. So by now, you all might have understood that basic salary, commission, bonus, allowances can be simply understood that it is a way in which the salary of the assessee is divided in a salary schedule. So you all might be thinking why this bifurcation or why this division is done of the entire salary. So the answer for that is the Income Tax Act provides some of the benefit in a form of exemption to the employee. So in order the employee can take the benefit given under section 10, the total salary of the assessee is divided into different parts. I hope this is quite clear to you all. So the basic salary, commission, bonus do not have any exemptions, okay, under section 10. So whatever basic salary, commission, bonus which has been received by the assessee or given in the salary schedule, we have to simply take it in this format and consider it in the computation of the income from salary. I hope this is quite clear. So the next line item is allowances. There are number of allowances given under this allowances in working note number 1. Okay, so there are some of the allowances on which there is exemption available under section 10. So that's why working note number 1 is created. So let's come to the next page where working note number 1 is written, and allowances is further bifurcated in fully taxable category, partly exempt category and fully exempt category. So as we have studied earlier in exemptions under section 10, that the exemptions are either available in partial exemption form or 100% complete exemption form. So that is what only it is given over here. Okay, so we will study that. So let's understand some fully taxable allowances given by the employer to the employee. So ER stands for employer and double E stands for employee. I hope this is quite clear. So remember that whenever I am writing ER, I am talking about employer, okay, and whenever I am talking or I am writing double E, I am talking about employee. I hope this is quite clear to you all. Fully taxable allowances can be remembered with the help of this acronym, that is FICO, want, SEP, D. This is D. Okay, so F in our acronym stands for fixed medical allowances, I in our acronym stands for interim allowances, C in our acronym stands for city compensatory allowances, O stands for overtime allowances, W stands for warden allowances, A stands for any other cash allowances, N stands for non-practicing allowances, T stands for tiffin, lunch, dinner allowances, T2 stands for transportation allowances to normal employee. Okay, if you want you can put an inverted commas over here and underline this normal employees. Okay, then S stands for servant allowances, E stands for entertainment allowances, P stands for project allowances, D stands for durance allowances. So many of the times I have seen that students have a habit of not studying this fully taxable allowances. They only study partly exempt and fully exempt allowances, and any other allowances other than this partly exemption and fully exemption allowances they consider as fully taxable. Please do not do this blunder, okay, because many of the times examiner ask question from this, okay, transportation allowances to normal employee, and students consider this as fully or partly exempt category, okay, allowances, and it causes a huge mistake in the solution. So please do not do that. So in order to remember it, I have given an acronym. Okay, you just need to remember the acronym and just read this 13 line items. You will automatically remember this, because in the exam any which ways the question will provide you the allowances. You have to decide whether it is a fully taxable allowances, whether it is a partly exempt allowances, or whether it is a fully exempt allowances. I hope this is quite clear to you all. And the next category in the allowances was partly exempt allowances. In order to remember partly exempt allowances, the acronym is HRA, to child to transport UT. Okay, so HRA stands for house rent allowances. Okay, so this is a complete acronym, HRA. HRA stands for house rent allowances. Okay, so many of the time employer provides the employee with the house rent allowances. Okay, so for example, if the employer provides the employee with a house rent allowances of say rupees 1 lakh per annum, so you have to consider it over here, and then we have to calculate exemption under section 10 subsection 13a. So this is a kind of a partial exemption given under section 10. Okay, so the formula for calculating the exemption available under section 10 subsection 13a is actual HRA received. So whatever actual HRA was received was 1 lakh, so we will consider it over here as 1 lakh. Then 50% of the salary of the assessee. Okay, and the salary will consist of the basic salary plus dearance allowances. DA stands for dearance allowances. Here in bracket it is recognized. Okay, so what does recognize means, I'll explain you as and when we will move further in the chapter, don't worry about it. Plus turnover commission. Okay, so we have studied about this dearness allowances over here in point number 13, and turnover commission is kind of a commission, so basically it is covered in our format. Okay, so the exemption under section 10 subsection 13a is available in this formula, that is actual HRA received 50% of a salary in case of the SSE is residing in the metropolitan cities like Mumbai, Chennai, Delhi, Kolkata. MCDK stands for Mumbai, Chennai, Delhi, Kolkata. This is all metropolitan cities. And the third point says that 40% of the salary in other cities, okay, other than this Mumbai, Chennai, Delhi, Kolkata. And fourth point is about rent actually paid by the assessee. So if the assessee has actually taken a house property on rent, then he have to pay the rent. So that is what here it is, rent actually paid by the assessee minus 10% of the salary. So many of the time the company, that is the employer, ER, pays the employee with the HRA, but this employee, okay, has his own house property. Okay, so basically if such is the case, then such employee will not get any exemption under section 10 subsection 13a. Why I am saying it so confidently? Because the assessee, that is our employee, will get the deduction, that is the exemption under section 13 subsection 13a if the rent is paid minus 10% of the salary. But if the rent is not paid, then automatically exemption under section 10 subsection 13a will be 0, and whatever HRA has been received, for example 1 lakh, it will be taken in the outer column, and finally it will be taken in computation of income from salary. I hope this is quite clear. And salary over here, in case of HRA allowances, in order to calculate exemption under section 1013a, salary will be calculated in this manner: basic salary, that is our basic salary, then we will add basic salary with dearance allowances, this dearance allowances, and such dearance allowances should be recognized. Okay, R stands for recognized over here, plus turnover commission. Commission we have seen in the format over here. Okay, so I hope this is quite clear. The acronym HRA, two child, two transport UT, HRA is complete. Okay, then two child means children's education allowances and children hostel allowances. So that's why I've written it over here, two child. So if the employee, that is EE, is receiving a children's education allowances from the employer ER, then such allowances whatever he has received will be reduced by maximum rupees 100 per child per month, maximum two child. That means, for example, if this employee is receiving 10,000 as children education allowances and he is having two children, okay, then the deduction will be available in this manner: two children into rupees 100 into 12, which is equal to 2,400 per annum. So 10,000 minus 2,400, and whatever amount will come in the outer column, it will be taken in the computation of the income of the assessee. I hope this is quite clear. Similarly, if the employee is receiving children hostel allowances, then maximum rupees 300 per child per month for maximum two children can be deducted from the actual children hostel allowances. I hope this is quite clear. So understand that if the employee, okay, if the employee is receiving education allowances from the employer, that is a children education allowances, then rupees 100 per month will be allowed as deduction for maximum two children only, irrespective how many children he has. Okay, but if the assessee is receiving children hostel allowances, then the deduction that will be available under the head income from salary is rupees 300 per month into number of child. I hope this is quite clear to you all. Okay, so the next point in our acronym is to transport. The next point is about transportation allowances to specially challenged assessee. Okay, so basically if an employee is a specially challenged individual, that is if he is blind, deaf, dumb or handicapped, then the transportation allowances that he has received will be further reduced by rupees 3,200 per month. Okay, but if the employee, that is the employee who is not a blind person or a deaf person or a dumb person or a handicapped person. So that is what we have studied in point number 9 in this fully taxable category, that transportation allowances to normal employee. And here in the partly exempt category, we have studied transportation allowances to specially challenged individual. So the deduction is available of rupees 3,200 per month for such individual. I hope this is quite clear. So the next point is transport company allowances to the driver. So understand that if an employer is a person who is running a logistic company, okay, logistic company or a logistic business, and such employer is paying the employee the transport allowances, okay, and this employee is a driver, okay, then whatever amount has been received by that driver as a transport allowances will be further reduced by this formula, which says that 70% of the amount received as allowances or rupees 10,000, whichever will be lower, will be reduced from the actual allowance. For example, the actual allowances received is say rupees 20,000, then 20,000 into 70% of the amount received is equal to 14,000, and the second category is 10,000, whichever will be lower of this both, that is 14,000 and 10,000, will be considered over here, and 10,000 will be subtracted from this 20,000, and the balance 10,000 will be taken into the computation of the income from salary. I hope this is quite clear to you all. So the last two allowances remaining in the partial exemption allowance category is UT. U stands for underground allowances. If an assessee, that is the employee, is receiving an underground allowances from the employer, then whatever allowances has been received by such employee, for example 10,000 has been received, then it will be reduced by 800 per month, that is 800 into 12, which will be equal to 9,600. Okay, so 10,000 minus 9,600, which will be equal to 400, and this 400 will be considered in computation of the income from salary. I hope this is quite clear to you. And the last allowances that is in the partly exemption allowance category is T stands for tribal area allowances. If an assessee, that is the employee, is receiving a tribal area allowances from an employer, then whatever allowances has been received by such employer, it will be further reduced by rupees 200 per month ad hoc basis. Okay, so wherever you are seeing this rupees 200 per month less rupees 800 per month, then this formula less this 3,200, this maximum 300 per child, or this maximum rupees 200 per child. So these are basically the exemptions, okay, or else we can call it as deductions given under the head of income from salary. Okay, so basically these are not exemptions given under section 10. These are some exemptions, or we can call it as deductions under the head income from salary. I hope this is quite clear. Okay, so now let's revise this entire page, and then we will move on to fully exemption category. Okay, so the fully taxable allowances can be remembered as FICO, wants, SEP, D. Okay, so the F in our acronym stands for fixed medical allowances, I stands for interim allowances, C stands for city commutation allowances, O stands for overtime allowances, W stands for warden allowances, A stands for any other cash allowances, N stands for non-practicing allowances, T stands for tiffin, lunch, dinner allowances, T2 stands for transportation allowances to normal employee. Okay, S stands for servant allowances, E stands for entertainment allowances, P stands for project allowances, D stands for dearness allowances. Okay, so dearness allowances is kind of important allowances. You will see this dearness allowances many times in this salary chapter in order to calculate the amount of salary. Okay, I hope this is quite clear. And the next category was partly exempt allowances. So partly exempt allowances can be remembered as HRA, to child to transport, UT. Okay, HRA itself stands for house rent allowances. So whatever allowances has been actually received by the employee will be considered over here, and it will be further reduced by the exemption available under section 10 subsection 13A. In order to calculate exemption under section 10 subsection 13A, the formula is actual HRA received 50% of the salary in case of Mumbai, Chennai, Delhi, Kolkata, or 40% of the salary in case of other cities where the assessee is residing, or where the assessee has taken the house property on rent. Okay, or the fourth says that rent actually paid by the assessee minus 10% of the salary, whichever will be lower of this three will be considered over here, and whatever amount has been received by the assessee as the HRA from the employer will be further reduced by the exemption under section 10 subsection 13A, and whatever balance remains here will be considered in the computation of the income from salary. I hope this is quite clear. The next is to child, that is children education allowances and children hostel allowances. If the assessee is receiving a children education allowances, then maximum rupees 100 per child per month, maximum 2 childs will be allowed as exemption or deduction under this particular allowances. I hope this is quite clear. But if the assessee is receiving a children hostel allowances, then maximum 300 per child per month exemption or deduction will be available for this allowances. I hope this is quite clear. Then the next is to transport. To transport means transportation allowances to specially challenged individual and transportation company allowances paid to the driver. Okay, if an assessee who is a specially challenged individual and he is receiving a transportation allowances simply means allowances received, that is money received from the employer to the employee for traveling from home to office. I hope this is quite clear to you all. So whatever allowances has been received by this specially challenged individual will be further reduced by rupees 3200 per month, okay, up to the amount that has been actually received by the specially challenged individual. I hope this is quite clear. Then if the assessee who has received a transportation allowances from the transport company, that is the driver, such assessee is the driver, then whatever amount has been received by such driver, it will be further reduced by 70% of the amount, that is the allowances of transportation actually received from such transportation company, or rupees 10,000, whichever is lower. And finally, if there is any remaining balance amount, it will be considered in computation of the income from salary. I hope this is quite clear. Point number 6 and 7 are the last two partly exempt allowances, and the acronym for that are UNT. Okay, U stands for underground allowances. If an assessee is receiving, that is the employee is receiving an underground allowances, so whatever he is receiving, ad hoc deduction or exemption is available to such employee. And similarly, if an assessee is receiving a tribal area allowances, then whatever amount received by such employee as tribal area allowances will be further reduced by rupees 200 per month. I hope this is quite clear to you all. Okay, so our fully taxable allowances and partly exempt allowances are complete. So let's understand this fully exempt allowances. So let's study our last allowances category, that is fully exempt allowances. In order to remember this fully exempt allowances, remember this acronym which says UNO, your CDTH. I know this acronym does not make a lot of sense, but just devote 5 minutes on this acronym and read this line items. After devoting 5 minutes to this acronym, automatically you will remember all these line items, and similarly you will remember the acronym also. Okay, so UNO stands for United Nation Organization. If an employee, okay, who is employed under UNO, that is United Nation Organization, and such United Nation Organization gives the allowances to such employee, then whatever allowances has been received by this employee will be 100% exempt. Okay, I hope this is quite clear to you. And such exemption is given under income from salary head. Okay, this exemption is not given under section 10. I hope this is quite clear. But the special allowances which is specified under this fully exempt allowances, the exemption for this special allowances is given under section 10 subsection 14. In order to remember this 6 line items, URCDTH acronym will help. Okay, so U stands for uniform allowances, R stands for research allowances, C stands for conveyance allowances, D stands for daily allowances, T stands for traveling allowances, H stands for helper allowances. So this is a special allowances. So you all might be thinking, what is this conveyance allowances? Earlier in fully taxable category, we have studied in point number T2, that was transportation allowances to normal employee is not allowed, but it is fully taxable and it is considered in computation of the total income of the salary of that assessee. I hope this is quite clear to you all. But here you are seeing that conveyance allowances. This conveyance allowances are two different things. This is given for a special purpose when the assessee moves outside his home city, okay, for employment. Then the conveyance allowances is given by the employer to the employee. Okay, these two are two different things. That's why I told you we need to remember this acronym, because this transportation allowances, conveyance allowances creates a lot of confusion. Okay, so if the question specifically says conveyance allowances, then you have to write exemption under section 10 subsection 14, that is whatever amount has been received by the assessee as the conveyance allowances will be 100% exempt under section 10 subsection 14. But if the assessee is receiving a transportation allowances, then such allowances will be fully taxable. I hope this is quite clear to you all. Then the D stands for daily allowances. Daily allowances received by the employee from the employer will be considered as fully exempt. Okay, then traveling allowances. This traveling allowances is for traveling from one state to other in order for employment. So whatever traveling allowances has been received by the employee from the employer will be considered as fully exempt. I hope this is quite clear, because this traveling is done by the employee for the company's work, not for his own purpose. I hope this is quite clear. And similarly, helper allowances, if an assessee is working in a company where he requires a helper to assist him in the work. So if a helper allowances is received by a assessee, okay, then whatever allowances has been received by the assessee as a form of helper allowances, it will be fully exempt, because the company does not want to keep that helper on the payroll of the company. Payroll of the company means they don't want to hire such helper. So that's why they are paying such helper allowances to the employee only, and the employee is paying to such helper. Okay, so that's why this helper allowance is received by the employee will be fully exempt. I hope this is quite clear. And the last 4 points that you are seeing: allowances to the High Court judge, compensatory allowances to the judge, sumptuary grant to the High Court, Supreme Court judge, or allowances granted to the government employee outside India, this all are fully exempt. Always remember that the question will never ask question from this last 4 points, because there are many good points to be asked in exam. Okay, if the examiner wants to ask question from this particular allowances, then they have to create a specific question where the employee, okay, where the employee should be a High Court judge, okay, or the employee should be a Supreme Court judge, or such employee should be a government employee. I hope this is quite clear. So do not stress on all this last 4 points, okay, which all were important. I have made acronym for them. I hope this is quite clear to you all. So our point number 4 in our format, which says allowances, is complete. Okay, and we have studied this working note number 1 also. Taxable perquisite we will study after some time, because taxable perquisite, what does perquisite means, we need to understand that. First of all, perquisite is kind of a non-monetary benefit, but in detail we will understand at a later part. Okay, let's understand point number 6, that is leave travel concession. Working note number 3 is leave travel concession. So if an assessee receives a leave travel concession, then whatever concession he has received, there is certain exemption given to such concession that has been received by the employee or the assessee under section 10 subsection 5, and such exemption under section 10 subsection 5 is a partial exemption. I hope this is quite clear to you all. So let's understand this. If an assessee is traveling by the air mode, so whatever concession the assessee has received, we will write it over here, and then we will calculate the exemption under section 10 subsection 5. The exemption will be calculated in this manner. Don't worry about all this written in this point number 1 and point number 2, because the question will have to specify all this thing, but in real life it is very difficult to calculate all this stuff. Okay, that means the exemption under section 10 subsection 5. Okay students, so let's understand it from start. Working note number 3 talks about leave travel concession. What does leave travel concession means? Let's come on a blank page and understand it. Leave travel concession simply means that the assessee, that is our employee, is on leave, and the company is paying such employee for his travel. Okay, so whatever amount the employee has received from employer for traveling will be further reduced with the exemption available under section 10 subsection 5. That is what it is given over here. So if an assessee is on leave and the company, that is the employer, is paying a travel concession, that is paying some money to the employee, then whatever money has been received will be considered here, and the exemption under section 10 subsection 5 will be calculated, and the amount received will be subtracted from the exemption under section 10 subsection 5, and whatever the balance will be considered in the computation of the income from salary. I hope this is quite clear. So let's understand this. If the leave travel concession is given to the assessee, and such leave travel concession is given for travel by air mode, then whatever amount has been given will be considered here, and the exemption will be calculated under section 10 subsection 5 in this following manner. The first point says that we have to calculate the value of the economic class airfare of the national carrier by the shortest route. Don't worry, you don't need to calculate all this, you don't need to ascertain the value. Simply this entire statement will be written, and the amount of that will be given to you in the exam, and the amount spent by the assessee actually will be considered over here, and whichever will be lower of this two will be considered over here, and the actual amount received by the assessee will be further subtracted from this value. For example, the value of leave travel concession has been received by the assessee is say rupees 1 lakh. The exemption under section 10 subsection 5 is say rupees 50,000. Then the balance of 50,000 will be considered in the computation of the income from salary. I hope this is quite clear to you all, and I hope you all are understanding the format now, okay? Because allowances, whatever we will calculate, it will be total and finally it will be taken in year, because we have to finally calculate the gross salary. I hope you are connecting the dots, okay? Just do not get lost in this working notes, okay? Because working notes are huge enough. The primary thing that you have to solve in the exam is this format, okay? And in exam hardly one or two working notes will come, okay? But while studying we have to study all the working notes, okay? So we are on working note number 3, okay? And we have completed if the assessee has received a leave travel concession for travel by air mode. But what if the assessee has received a leave travel concession for travel by rail mode? Then whatever amount has been received will be considered here, and the exemption under section 10 subsection 5 will be ascertained. How it will be ascertained? The value of the first class AC railway fare for the shortest route. You just need to read this, because in the exam the examiner will provide all the details, okay? You just need to be very cautious about this word first class, because many of the times examiner tries to confuse you by writing here second class, then you can't consider it over here, okay? And similarly over here also, in case of economic class, the examiner will confuse you by writing a business class word over here. You have to select a right option, okay? So that is, in this case, if travel by rail mode, we have to select the first class AC rail fare only, okay, for the shortest route, okay, and not for the second class AC rail fare or whatever, okay? So be cautious, remember this, okay? You don't need to identify anything. This all details will be given in the question. You just have to feed it and find out whichever is lower, that is the amount spent or the value of the first class AC fare for the shortest route, and will be considered in the exemption. For example, if the travel for the rail mode, that is the leave travel concession, is given by the employer to the employee of rupees 60,000, and the exemption under section 10 subsection 5 comes to around 30,000. So in the outer column this 30,000 will be taken, and this 30,000 will finally be taken into our first format, that is will be considered in computation of the income from salary. I hope it is quite clear. I hope you all are connecting the dots. Okay, so the third category is if the railway mode is not available and the assessee is transporting by a recognized mode, that is a recognized public transport, then for such recognized public transport, whatever leave travel concession has been received by the employee from the employer will be considered over here, and the exemption under section 10 subsection 5 will be available in this manner. First class deluxe fare for the shortest route or the amount spent, whichever is lower, will be considered here, and the outer column, if any balance is there, will be taken, and finally this outer column will be taken into our main format. I hope this is quite clear. So this is talking about where a possibility is there is no railway mode available and the assessee is transporting by a recognized public road only, okay? So let's understand point number 4. Point number 4 says that if the assessee is traveling by an unrecognized public road transport, that is the railway mode does not exist, and as well as the recognized public transport is also not available, then how the exemption under section 10 subsection 5 will be calculated? Then the exemption under section 10 subsection 5 will be calculated in this manner. First class fare for the shortest route by rail, by what? By rail, or the amount spent, whichever will be lower, will be considered here, and actually the amount whatever has been received by the employee from the employee will be considered here and will be subtracted from this exemption under section 10 subsection 5, and whatever amount is balanced will be taken into our main format, that is computation of the income from salary. I hope you have understood it. I know this is quite tricky and it is quite complicated also. So let's revise this working note number 3 now. Leave travel concession. You all might be thinking why such companies are giving leave travel concession. Many MNCs have started this culture to pamper their employees so that the employees stay very loyal to them. So that's why this leave travel concession and all such other benefits are given to the employee, okay, by the employer. So do not get irritated. So let's revise this. If an assessee, that is our employee, receives a leave travel concession for traveling by air mode, whatever amount has been received by the employee from the employer will be written over here, and we will calculate exemption under section 10 subsection 5. If the employee is traveling by air mode, then the exemption under section 10 subsection 5 will be calculated in this manner. Value of the economic class airfare of the national carrier by shortest route, or the amount spent, whichever will be lower, will be considered as an exemption under section 10 subsection 5. Similarly, if the leave travel concession is given by the employer to the employee and such employee is traveling by railway mode, so whatever amount has been received will be considered here, and the exemption under section 10 subsection 5 will be calculated in this manner. Value of the first class AC rail fare for shortest route, or the amount spent, whichever will be lower, will be considered as exemption under section 10 subsection 5. But if the assessee is traveling by a recognized public road transport where a railway mode does not exist, then whatever amount has been received by the employer as a leave travel concession will be considered here, and the exemption under section 10 subsection 5 will be calculated in this manner. First class deluxe fare for the shortest route and the amount spent, whichever is lower, okay, will be considered over here. I hope this is quite clear. But if the assessee who has received a leave travel concession and he is traveling by an unrecognized public road transport, because the railway mode does not exist and the recognized public transport mode also does not exist, then whatever amount has been received will be considered over here, and the exemption under section 10 subsection 5 will be calculated in this manner. First class fare for the shortest route by rail, okay, by rail, or the amount spent, whichever will be lower, will be considered over here. Okay, I hope this is quite clear, and I hope working note number 3 you have understood it. I hope this is quite clear. Okay students, so we have completed with basic salary, commission, bonus, allowances, as well as leave travel concession. So now let's start with our fifth line item, that is taxable perquisite. So basically we need to understand what does perquisite means. So come to our notes. Okay, in the notes I have written what does perquisite means. Okay, perquisite means benefit provided by the employer to the employee. I hope this is quite clear. So it is kind of a monetary benefit, okay, or it can be called as non-monetary benefits. Okay, so whatever benefits are given by the employer, that is ER, to the employee, it is considered as perquisites. I hope this is quite clear to you all. So now let's move back to our format book. Okay, taxable perquisite has working note number 2. So we need to see working note number 2. Okay, so come to working note number 2. So here is working note number 2, taxable perquisite. So the first type of a taxable perquisite is rent-free accommodation. Basically, rent-free accommodation simply means a house property is provided to the employee, okay, and it is considered as non-monetary perquisite. So there are two types of rent-free accommodation. First is rent-free unfurnished accommodation, that is known as RFUA, and second category is rent-free furnished accommodation, that is RFA. Okay, so let's start with first part, that is rent-free unfurnished accommodation. If an employer, okay, if an employer is giving the employee a rent-free unfurnished accommodation, that means a unfurnished house property, okay, then how such unfurnished house property, that is our non-monetary perquisite, will be valued, okay, will be valued, so that such value of non-monetary perquisites can be chargeable under tax. I hope this is quite clear. That is, can be considered in the computation of income from salary. I hope this is quite clear. So let's see this particulars under point A, which says that if a rent-free unfurnished accommodation is provided to a government employee, if it is provided to a government employee, that means the employer will be who? The employer will be government only, right? Then how to calculate the value of non-monetary perquisite? Okay, so the license fee of that house property has to be considered. Don't worry, this license fee will be provided to you in the exam. You don't need to ascertain how the license fee will be calculated. So this detail will be provided in the exam. So this license fee, whatever is for that unfurnished, that is our rent-free unfurnished accommodation, will be further reduced by the amount recovered from the employee. So many times what happen is the employer, okay, gives the house property to the employee for staying, but they charge some money, that is some nominal amount from the employee. Okay, so if they are charging a nominal amount from the employee, that nominal amount which has been recovered from the employee, that is our assessee, will be reduced from this license fee, and whatever is the balance amount will be considered here. For example, understand the license fee of the house property is say around 5 lakhs, okay, per annum, but the assessee is paying to the employer, that is the government, a rupees 3 lakh, okay, per annum. So the difference between this two is 2 lakhs, okay. So 2 lakhs will be considered over here, and this 2 lakhs will be taken in the computation of income from salary. I hope this is quite clear to you all. This is quite simple, okay. Then the second category in this rent-free unfurnished accommodation is if a rent-free unfurnished accommodation is provided to a non-government employee and house property is owned by the employer, okay. Here the house property is owned by employer, so that means there will be a second category where the house property will not be owned by the employer. I hope this is quite clear. So that is point number 3. We will see that after seeing this point number 2, okay. So what does point number 2 says? If a rent-free unfurnished accommodation is provided to a non-government employee and the house property is owned by the employer, then how to calculate the value of non-monetary perquisites, okay. NM stands for non-monetary perquisite. So if the population is up to 10 lakhs in the city where the employer has the house property and such house property is used by the employee, then 7.5% of the salary will be considered as the value of non-monetary perquisites, okay, in order to take such value of non-monetary perquisites in the computation of income from salary. I hope this is quite clear. But if the population is between 10 lakh to 25 lakhs in that city, then 10% of the salary will be considered as non-monetary perquisites value. I hope this is quite clear to you all. Similarly, if the population is more than 25 lakhs in the city, then 15% of the salary will be considered as the value of the non-monetary perquisite, that is a rent-free accommodation given to rent-free unfurnished accommodation given to the employee by the employer. I hope this is quite clear to you all. Okay, so let's revise this part again. If a rent-free unfurnished accommodation is provided to a non-government employee and the house is owned by the employer, then if the population is up to 10 lakhs in the city in which the employer is having the house property, then 7.5% of the salary will be considered as the value of the non-monetary perquisite. I hope this is quite clear. But that means, or if the population is between 10 lakh to 25 lakh in the city, then 10% of the salary will be considered as the value of the non-monetary perquisite. I hope this is quite clear. Or if the population is more than 25 lakhs in the city in which the employer is having the house property and such house property is given to the employee by the employer, then 15% of the salary will be considered as value of such non-monetary perquisites. I hope this is quite clear to you all. And we have to reduce any amount recovered from the employee, okay. So how to understand this point, okay. So either this and this will be the combination, or either this and this will be the combination, or either this and this will be combination, because it is not possible that the employee is having a house property in all these three types of populated areas. I hope this is quite clear. The house property will be given by the employer to the employee in any of these three populated areas, okay. So the question will specify the house property is in which populated area, whether it is up to 10 lakh populated area or between 10 to 25 lakhs or about 25 lakhs populated area, okay. So we have to consider that, and on the basis of that we will decide the percentage, that is 7.5% or 10% or 15% of the salary will become our value of non-monetary perquisites. I hope this is quite clear. And then whatever value we have derived, we will write it over here, okay, and then we will reduce the amount recovered from the employee. I hope this is quite clear. So for example, assume that if the value of non-monetary perquisites, okay, is rupees 10 lakh, okay, as derived from either of these formulas, okay, and the amount recovered from the employee is say rupees 7 lakhs. So in the outer column 3 lakhs will be taken, and this 3 lakhs will be taken in the computation of income from salary. I hope this is quite clear to you all. So let's move on to our next point, that is point number 3. If a rent-free unfurnished accommodation is provided to a non-government employee and the house property is hired by the employer, that means the employer is not having his own house property, he has hired the house property and he has given such house property to the employee. I hope this is quite clear. Then how to calculate the value of non-monetary perquisites, okay. So it will be calculated in this manner. First we will ascertain the higher charges paid by the employer, that is the actual rent or the lease paid by the employer, okay, and we will mention that amount over here, or 15% of the salary, whichever will be lower, will be considered as the value of non-monetary perquisites. I hope this is quite clear to you all. And then this non-monetary perquisites value will be further reduced by any amount recovered from the employee. I hope this is quite clear. So I hope you all have understood this part. If a employer, okay, is giving a non-monetary perquisites, and in return he is recovering some amount, so that amount whichever is recovered from the employee, it will be reduced from this value of non-monetary perquisites. I hope this is quite clear to you all. Okay, so this point, less amount recovered from the employee, that means whatever the value we have ascertained, it will be reduced further with the amount recovered from the employee. This is a common point. I hope you all have understood this. Okay, so now let's move on to point number 4. Point number 4 says that if the employer, okay, provides the accommodation in an hotel for more than 15 days, then how the non-monetary perquisite value will be calculated. So for example, understand that a foreign delegate has came in India, that means a MNC is there, okay. This MNC has a branch in India, okay, and its main company is in Germany, okay, and the Germany's head officer wants to visit in India, okay. So this officer is hardly going to stay in India for say 30 days, okay. So if he is going to stay hardly for 30 days in India, so it is very illogical for the Indian MNC, that is the branch of that German MNC, to hire a flat, okay. So what they will do is they will simply accommodate that head officer in the hotel, okay, and such accommodation is provided in the hotel. Then if it is more than for 15 days, in our case the head officer is going to stay in the hotel for 30 days, then how the non-monetary value of perquisite will be derived? It will be derived with the help of this formula, which says that 24% of the salary or the actual amount paid, whichever will be lower, will be considered it over here, and further it will be reduced by the amount recovered from the employee. I hope this is quite clear. Okay, so now let's revise point number 4. Point number 4 says that if the employer provides an accommodation to an employee, and such accommodation is provided in the hotel, and such accommodation is for more than 15 days, okay, this sign is more than, okay, more than 15 days, then how to calculate the value of non-monetary perquisite? So in order to calculate the non-monetary perquisite in case of the accommodation is provided in a hotel for more than 15 days, is first we have to calculate 24% of the salary or the actual charges paid for such accommodation, whichever will be lower will be considered over here, and further it will be reduced by the amount recovered from the employee. For example, here out of this two, the amount of, that is the value of non-monetary perquisite, comes to around say 15 lakhs, okay, and the amount recovered from the employee is say 5 lakhs, okay. So in the outer column 10 lakhs will be taken, and this 10 lakhs will be taken into the income from salaries calculation. I hope this is quite clear to you all. So let's revise this entire table now, okay. So what we are studying working note number 2, taxable perquisite. Under taxable perquisite we are studying rent free accommodation, that is also divided into two categories, that is rent free unfurnished accommodation or rent free furnished accommodation. So we have studied this part, that is rent free unfurnished accommodation. So let's revise this. First point says that if rent free unfurnished accommodation is provided to a government employee, irrespective that government employer has such house property owned or hired, okay, the value of non-monetary perquisites will be calculated in this manner, that is license fees, which will be further reduced by the amount recovered from the employee, okay, and whatever the balance comes here, it will be taken into the income from salaries computation of that assessee, that is the government employee. I hope this is quite clear to you all. But if a rent-free unfurnished accommodation is provided to a non-government employee and the house property is owned by the employer, that is the house owned by the employer, then how to calculate the value of non-monetary perquisite? So it will be calculated in this manner. If the house property is in the area where the population is up to 10 lakhs in the city, then 7.5% of the salary will become the value of non-monetary perquisites. I hope this is quite clear to you all. But if the house property is in the area where the population is between 10 lakhs to 25 lakhs in that city, then 10% of the salary will become the value of non-monetary. NM stands for non-monetary perquisites. I hope this is quite clear. But if the house property is in the area where the population is more than 25 lakh in the city, then 15% of the salary will become the value of non-monetary perquisite. I hope this is quite clear. So whatever amount is derived with the help of this formula, okay, will be considered over here, and it will be further reduced by amount recovered from the employee. I hope this is quite clear. But what if the rent-free unfurnished accommodation is provided to a non-government employee and the house is hired by the employer? That means the house is not owned by the employer. Then how to calculate the value of non-monetary perquisite? It will be calculated with the help of this formula, which says that higher charges paid by the employer or 15% of the salary, whichever is lower, okay, will be considered over here, and it will be further reduced by amount recovered from the employee. I hope this is quite clear to you all. And the fourth point says that if the employer provides the accommodation to the employee, okay, in hotel, and such accommodation is for more than 15 days, then how to calculate the value of non-monetary perquisite? It will be calculated in this manner: 24% of the salary or the actual charges paid, whichever is lower, will be considered over here, and it will be further reduced by the amount recovered from the employee. I hope this is quite clear, and I hope you all are understanding this down arrow as whichever is lower, because this whatever I am writing, whichever is lower, it is symbolically represented with a down arrow. I hope this is quite clear. So we have studied in this format that 7.5% of the salary will become as the value of our non-monetary perquisites. Okay, so at many places we have studied salary. Here also we have studied salary, and in the last point also we have studied salary. So as per income tax, what does salary means? In order to calculate rent-free accommodations value of non-monetary perquisites. Okay, so here salary specifically means basic salary plus dearance allowances recognized plus turnover commission plus normal commission plus bonus plus all allowances plus ex gratia. I hope this is quite clear to you all. So let's move on to the part B. So part B was rent-free furnished accommodation. That means the employer is not only providing the employee with the house property, but he is also providing a house property with furnished accommodation. Okay, I hope this is quite clear to you all. Okay, that means all furniture, bed, cupboards, TV sets, all are given to that employee along with that house property. I hope this is quite clear to you all. So let's start with point number B. Point number B, which says that we have to calculate the value of non-monetary perquisites, okay, of rent-free furnished accommodation. In order to calculate the rent-free furnished accommodations value of non-monetary perquisite, what we have to do is we have to firstly find out the value of non-monetary perquisites considering that such furnished house property is also non-furnished, okay, that is unfurnished. That is our point A. Okay, so we have to calculate as per point A over here, that is rent-free unfurnished accommodation. We have to calculate the value as per this format only that we have studied earlier in point number A, and then we have to add the value of the furniture's benefit. Okay, so basically what extra that employee is receiving, the employee is extra receiving the furniture's benefit, so we will add that furniture's benefit. So how to calculate this furniture's benefit? Furniture's benefit will be calculated in this manner: if the furniture is owned by the employer, then 10% depreciation of that furniture will be considered over here. That means the rent-free unfurnished accommodation will be added with the furniture benefit if it is owned by the employer at the rate 10% depreciation value of the furniture. I hope this is quite clear. But if such furniture is hired by the employer, that is, it is not owned by the employer, then the higher charges paid by the employer will be considered over here. That means it will be added with the rent-free unfurnished accommodation, and at the end, if any amount is recovered from the employee, it will be considered over here. I hope this is quite clear. So you all do not make a mistake over here while calculating this figure. So basically our format over here was we used to calculate rent-free unfurnished accommodation. Okay, our complete format was license fees less the amount recovered from the employer. That means whatever amount finally we were receiving, we were considering as rent-free unfurnished accommodations value of non-monetary perquisites. Okay, so while calculating this rent-free unfurnished accommodations value, do not reduce it with the amount recovered from the employee, because if you do that, you will reduce this amount recovered from employee twice. Okay, either reduce it over here or either reduce it over here. Okay, if you want, you can strike this off completely, because either study this format completely and find out a final figure over here and take that final figure over here and add the furniture benefit and finally calculate the taxable value of the perquisite. You all make a call what format you want to follow. If you want to strike this off, you can strike it off in your notes. Okay, that means you will calculate the entire value over here, and as it is, you will take it in the first line item. I hope this is quite clear. So in order to avoid the mistake, I am explaining it to you. Okay, I hope you all have understood this. So this was our first taxable perquisite, that is rent-free accommodation. So you all might have seen many of the times the companies, that is the employer, provide their higher officer, that is higher ranking officers, with house property to stay. Okay, so that's why this taxable perquisite, which was a non-monetary perquisite given by the employer to the employee, is considered as taxable. Okay, I hope you all have understood this rent-free accommodation non-monetary perquisite, and I hope you all have understood how to calculate the value of this non-monetary perquisite, so that this value that we have derived, that we can take in the computation of income from salary. I hope this is quite clear. So whatever amount we will derive in this column, okay, in this column we will take it over here. Okay, and it will be considered in our computation of the income from salary, and finally we will derive a gross salary. I hope you all are understanding these things. Okay, so let's come back. So working note number 1, taxable perquisites, part number 1, that is first point, rent free accommodation is complete. So let's move on to the second point, which says motor vehicle facility to the employee. That means car facility given to employee. So you all only tell me, if an employer is providing a house property facility to the employee, so this employer is sufficiently capable enough to give this employee a car facility also. Okay, so let's understand how to value this non-monetary perquisites, okay, of the car facility in the value, that is in the monetary terms, so that we can consider this value in the computation of income from salary. I hope this is quite clear. So there are 3 categories under this, that is motor vehicle facility to the employee. Okay, so now let's understand the first point. If such motor vehicle is given only for office use, that means the employer has given the car to the employee only for the office use. That means the car will pick employee in the morning, drop him to the office, okay, and from the office it will drop him to home. Okay, so during this period the car is at the office premises only. That means the car given by the employer to the employee is only for office use. Okay, that means it is not used by his family members, neither by him on the Sundays when the office is having an holiday. That time also this car will not be available to this employee for his personal use. Okay, then personal use. Okay, then how to calculate the value of such perquisite? Then it is said that it is considered as the employer is giving this benefit to the employee for his own benefit. That means employer wants his own benefit, that's why he is giving this benefits to the employee, and the benefit of the employee is only traveling. Okay, he is not getting any other benefit, and this benefit derived by the employee of traveling is only for office purpose. Okay, so that's why fully exempt perquisite it is. That means if the motor car is given by the employer to the employee for office use only, then will not calculate the value of this perquisite, okay, because this perquisite is only for the office use, okay. So here the employee is not receiving any extra benefit, that's why it will not be calculated. That's why the value of non-monetary perquisites will not be calculated, and such value will not be taken in computation of income from salary. I hope this is quite clear. And the second category says that if such motor vehicle is given only for the personal use, that means the employer has given the employee car facility for the employee's benefit, okay, for his benefit only, then how to calculate the taxable value of the perquisite, okay. So in order to calculate the taxable value of the perquisite, this is the format. The format says that if the car is owned by the employer or hired by the employer, how we will calculate. So let's see that if the car is owned by the employer, then cash depreciation at the rate 10%. If owned by the employer, the car is owned by the employer, we will consider this, okay. But if the car has been hired by the employer, then we will consider this, okay. And we will add repairs and maintenance expenses incurred by the employer, and we will also add the driver's salary if the employer has given a driver also along with the car facility to this employee, okay. And we will reduce the amount recovered from the employee. I hope this is quite clear. So let's understand this format now little bit in detail. So basically, if the car is owned by the employer, then how to calculate the value of perquisite? We will calculate the car's depreciation at the rate 10%, okay, if it is owned by the employer, and further we will add repairs and maintenance expenses incurred by the employer, okay, it is employer. And if the driver facility is given, then the driver salary will also be added. How much driver's salary will be added irrespective of the employer paying this driver, it will not be considered. We will consider as per the income tax act the rate given, okay. The rate given by the income tax act for the driver's salary is 900 per month into the number of months. We will add that, okay, and we will further reduce the amount recovered from the employee if any, okay. So there is a possibility that the employer, okay, may give the employee the car facility with or without driver facility. I hope this is quite clear to you all by now, okay. And it is also possible that employer may or may not recover the amount from the employer. So if he recovers any amount from the employer, it will be taken over here and it will be reduced from these values, okay. But if it is not taken, we will not consider it over here. I hope this is quite clear. And similarly goes for this driver salary also. I hope you all have understood. If a car is owned by the employer, then how to calculate the value of this non-monetary perquisites. I hope this is quite clear. Similarly, if the car is not owned by the employer and it is hired by the employer, okay, then how to calculate the value of non-monetary perquisite? The value of the non-monetary perquisite will be calculated in this manner. Higher charges, that is the actual charges paid by the employer, will be considered over here, and further the repairs and maintenance expenses incurred by the employer will be considered over here. And if the driver facility is given, then we will add the driver salary, okay, if the driver is provided to the employee, okay, along with the car facility. And how the value of the driver's salary will be calculated? It will be calculated on the basis of 900 rupees per month, okay, into number of the months actually the car and the driver facility given to the employee. I hope this is quite clear. And further it will be reduced by the amount recovered from the employee if any, okay. And whatever the final value comes over here, it becomes a taxable value of perquisite, that is TVP, taxable value of perquisite, okay. And whatever this taxable value of the perquisite is, it will be considered in the computation of income from salary format. I hope this is quite clear to you all. Okay students, so now let's start with our third category, that is point number 3. Point number 3 says that if a car, that is a motor vehicle, is given for personal and office use, then how to calculate the taxable value of this non-monetary perquisite? The taxable value, that is the value of the non-monetary perquisite, will be calculated with the help of this format. This format says that if the vehicle is owned by the employer, if it is owned by the employer, and the repairs and maintenance cost is bared by the employee, then the taxable value of the perquisite will be calculated in this manner. That is, if the car's engine is up to 1600 cc, then 600 per month will become the taxable value of the perquisite, and this value will be taken in the computation of income from salary. And if the employee is having a driver facility, that is the driver facility has been provided to this employee by the employer, then the driver's salary will be calculated on the basis of 900 per month, and this two total, that is as per the 1600 cc, and the driver's salary total, that is 1500 per month, into the number of the months the facility was utilized by the employee, whatever value comes, it will become the taxable value of the perquisite, and this will be considered in the computation of income from salary. I hope this is quite clear to you all. In the second point says that the vehicle is owned by the employee. Okay, it is owned by whom? It is owned by the employee, and the repairs and maintenance cost is borne by the employer. That means employee is receiving a monetary perquisite. Okay, what is receiving? A monetary perquisite. How is receiving the monetary perquisite? Monetary perquisite is received in the form of repairs and the maintenance cost bear by the employee. Okay, since the car is of employees, okay, the cost of repairs and maintenance should be ideally bared by the employee. Okay, but it is bared by the employer, so the value of the cost of this repairs and maintenance will be considered over here, and further it will be reduced by the value. What value? If the car's engine is up to 1600 cc, then 1800 per month into the number of months the employee is using his car for the office use, okay, and for his personal use will be calculated, and whatever amount will come will be reduced from the repairs and maintenance cost bear by the employer. Okay, and if the driver facility is given to the employee by the employer, then 900 per month will be considered as the taxable value of perquisite of this driver facility. Okay, and finally whatever amount is derived over here will be considered as the taxable value of the perquisite, and this taxable value of the perquisite will be taken in the computation of the income of the salary. I hope this is quite clear. But if the car's engine is more than 1600 cc, okay, is more than 1600 cc, then how to calculate the taxable value of the perquisite? The taxable value of the perquisite will be calculated in this manner. Repairs and maintenance cost bared by the employer, whatever actual cost he has bared, we will consider it over here. Okay, and further it will be reduced by 2400 per month if the car's engine is more than 1600 cc, and it will be added by the driver's salary if the driver facility is given to the employee by the employer. Okay, so this 900 per month is the taxable value of the perquisite. Okay, so the total whatever is derived, it will be considered as taxable value of the perquisite, and this taxable value of the perquisite will be considered in the computation of income from salary. I hope this is quite clear. Third point says that if the vehicle is owned by the employee and the repairs and maintenance cost is also incurred by the employee, that means you are having your own vehicle and you are only bearing the cost of the vehicle, so why will this be considered as perquisite even? Okay, it will not be even considered as perquisite, it will be considered as you are using your own vehicle for your own benefit, so it won't be considered as perquisite. That means it is fully exempt. Okay, so don't get confused, do not remember this point also, because it is quite a common sense. You are having your own vehicle and you are bearing all the expenses on that vehicle on your own, so why will that be considered as a perquisite by the employer? Okay, I hope this is quite clear to all. Okay students, so now let's understand point number 4. Point number 4 says that if the vehicle is owned by the employer and the employer is only bearing the cost of repairs and maintenance, then what will be the taxable value of the perquisite? The taxable value of the perquisite will be calculated in this manner. Cost of the repairs and maintenance is paid by the employer, then rupees 1800 per month. If the car is having an engine up to 1600 cc, then this 1800 per month into the number of the months the facility is provided to the employee will be considered as a taxable value of the perquisite. I hope this is quite clear. But if the car's engine is more than 1600 cc, then 2400 per month, okay, that is what is written over here, into the number of the months the car facility was used by the employee, that will become the taxable value of the perquisite, and further it will be added by the driver's salary, that is 900 per month if the driver facility is given to the employee. I hope this is quite clear. So let's revise this point number 4. Point number 4 says that if the vehicle is owned by whom? It is owned by the employer, and the cost of the repairs and maintenance is also borne by the employer, then how to calculate the taxable value of the perquisite? Taxable value of the perquisite will be calculated in this manner. If the car's engine is up to 1600 cc, then rupees 1800 per month will be considered as the taxable value of the perquisite, or 2400 per month if the car's engine is more than 1600 cc, then this will become the taxable value of the perquisite, and it will be further added with the driver's salary if the driver facility is also provided to the employee. I hope this is quite clear to you all. So students, I just want to highlight some of the places where the students generally make the mistake. The students generally make the mistake in point number 1 and point number 4. Okay, because they mix this point number 1 and point number 4 with point number 2. Because in point number 2, what is the case? The case is vehicle is owned by whom? Vehicle is owned by the employee, and the employer is paying the cost of repairs and maintenance. That means he is paying the monetary perquisite. Okay, so point number 1 and point number 4 are non-monetary perquisite, and point number 2 is monetary perquisite, because the employee is paying, that is the employer is paying this repairs and maintenance cost, okay, on behalf of whom? Employee. Okay, so that will be considered over here, and it will be further reduced with the capacity of the engine. That is, if the car's engine capacity is up to 1600 cc, then 1800 per month will be reduced, and if the car's engine capacity is more than 1600 cc, then 2400 per month will be reduced from this cost of repairs and maintenance paid by the employer, and it will be further added by the driver's salary if the driver facility is provided to the employee. I hope this is quite clear. So basically this point 2 format is mostly clubbed by the students in point 1 and point number 4. So do not do that mistake. That's why with red pen I have written taxable value of the perquisite. These are not the taxable value of the perquisite. This helps us to derive the taxable value of the perquisite. But in case number 1 and 4, the employer and the employer are giving a non-monetary perquisite. So that's why we have to calculate, that why we have to identify the taxable value of the perquisite. So that is what the income tax has given a direction in. Do not make a mistake in point number 2 as well as in point number 1 and 4. Okay, I have seen students making a mistake here a lot of time, and in the exam the examiner is definitely going to ask a question on this, because it is quite practical that employer has given a car facility to the employee. This employee will definitely use this car for his personal as well as for office use. Okay, I hope this is quite clear to you all. So finally, our point number 2, that was motor vehicle facility given to the employee, that is a non-monetary perquisite, comes to an end. But in this entire page, this point number 2 is only the monetary perquisites, okay, given by employer to the employee. So if you want, you can write over here monetary perquisites in bracket. I hope this is quite clear to you all. So let's revise this entire non-monetary perquisite of motor vehicle. So the first category was, if such motor vehicle, that is the car, is given only for office use, then it will be considered as fully exempt perquisite. Okay, we will not calculate the value of the perquisite in order to take it in the computation of income from salary. But what if the car facility is given only for the personal use? Then how to calculate the value of the perquisite so that we can take such value in the computation of income from salary? So it will be calculated in this manner. Salary, it will be calculated in this manner. If the car is owned by the employer, then car's depreciation at the rate 10%, and it will be further added with the repairs and maintenance charges incurred by the employer, and it will be further added with the driver facility if the driver facility is provided by the employer to the employee. Okay, and it will be further reduced by the amount recovered from the employee. I hope this is quite clear. And finally, we will derive a taxable value of the perquisite. But what if the car is not owned by the employer, it is hired by the employer? Then the hire charges paid by the employer, and further it will be added with the repairs and maintenance charges incurred by the employer, and the driver salary will be added if any driver facility is given by the employer to the employee. Okay, and it will be further reduced by any amount recovered from the employee, and then we will derive a taxable value of the perquisite. I hope this is quite clear. Okay, so let's move on to our third category, that is, if the motor vehicle, that is the car, is given for the personal and office use by the employer to the employee, then how to calculate the taxable value of the perquisite? It will be calculated in this manner. Point number 1, if the vehicle is owned by the employer and the repairs and maintenance cost is borne by the employee, then the taxable value of the perquisite will be this. Okay, what is this? If the car is having a engine capacity of up to 1600 cc, then 600 per month will become the taxable value of the perquisite, and along with this car a driver facility is given, then 900 per month will also be added, and this will become a total taxable value of the perquisite. But what if the car engine's capacity is more than 1600 cc, then 900 per month will become the taxable value of the perquisite, and along with this car a driver facility is given, then only 900 per month will be added with this 900, and finally we will derive a taxable value of the perquisite. Similarly, in point number 4, if the vehicle is owned by the employer and the cost of repairs and maintenance is also borne by the employer, then the taxable value of the perquisite will be calculated in this manner. Cost of the repairs and maintenance paid by the employer, then the taxable value of the perquisite will be 1800 per month if the car's engine capacity is 1600 cc and a driver facility is also given, then 900 per month will be added with this 1800 per month, and that will become a taxable value of the perquisite. And similarly, if the engine's capacity is more than 1600 cc, then 2400 per month will become the taxable value of the perquisite for such perquisites given by the employer to the employee. And if the driver facility is also given along with this car, then the driver facility which has been provided to the employee will also be considered as taxable value of the perquisite. For that, 900 per month will be also added with this 2400 per month, and finally the total will become the taxable value of the perquisite, and this taxable value of the perquisite will be taken into the computation of the income from salary. I hope this is quite clear. So let's move on to point number 2. Point number 2 says that vehicle owned by the employee, okay, who is owning this vehicle is owned by the employee and the repairs and maintenance cost is borne by the employer, then we have to write the value that has been borne by the employer, that is the cost of repairs and maintenance borne by the employer, and such cost will be further reduced if the car's engine capacity is up to 1600 cc with 1800 per month into how many number of months the car facility was given to the employee, okay, that will be reduced. Or if the engine capacity is more than 1600 cc, then 2400 per month will be reduced from the cost which has been actually borne by the employer, okay. And a driver facility is also given to the employee by the employer, then the taxable value of the perquisite of this driver facility is 900 per month. It will be simply taken over here, and whatever amount we derive from this, okay, that is the cost borne by the employer which is reduced by the car's engine capacity, and the driver facility is added, okay. So whatever amount we have derived, that is the value we have derived, it will become the taxable value of the perquisite, and this taxable value of the perquisite will be taken in the computation of the income from salary. I hope this is quite clear to you. So students, under working note number 2, that is a taxable perquisite, we have completed the first part, that is rent-free accommodation, and we have also completed the second part, that is motor vehicle facility given to the employee, which is also a non-monetary perquisite. So let's move on to our third part, that is education facility provided by the employer to the employee, which is also a non-monetary perquisite, okay. So if an education facility is provided by an employer to his employee, then whatever facility has been provided by this employer to his employee, it will be fully exempt, okay. I hope this is quite clear to you all. But what if this education facility is provided by the employer to other than this employee? Then what will be the case? The case will be the whatever facility has been provided by the employer for educating the other person other than the employee, whatever expenses that has been incurred by this employer, it will be considered as taxable, that is fully taxable. So whatever education expenses incurred by employer for this other person other than the employee, it will be considered as taxable perquisite, okay. It will be considered as taxable perquisite. In other words, it can be said that whatever amount, okay, whatever amount this employer has incurred will be included in the computation of income from salary of this employee, okay. I hope this is quite clear to you all. Okay, so let's revise this part number 3. Part number 3 says that education facility provided by the employer, which is a non-monetary perquisite, and this education facility which is given by the employer, it is given to the employee. So whatever the expenses has been incurred by this employer for this education facility given to this employee, it will be fully exempt. That means whatever amount incurred by the employer on his employee, it will not be taken in the computation of income of salary of this employee. I hope this is quite clear. So many of the times you all might have seen that this MNCs encourages their staff to take some education so that it will help the company, okay, and the cost of such education is bear by the employer. So that is what this is, okay. So if the education facility provided by the employer to the employee, then whatever cost bear by this employer will not be considered in the income of salary of this employee. I hope that is quite clear. So that why it is written over here fully exempt. But what if the education facility provided by the employer to other than the employee, that is some family member of this employee other than the children's, okay, because this is the third category. That means, for example, if the education facility provided by the employer to other family members like spouse, like brother, okay, or parents of this employee, then whatever expenditure has been incurred by this employer on the education facility to other than this employee, it will be considered, okay, it will be considered in the computation of the income from salary of this employee. So that's why it is written over here fully taxable. I hope this is quite clear. But what if the education facility has been provided by the employer to the employee's children's, okay, then how to calculate the value of this non-monetary perquisite? The value of the non-monetary perquisite will be valued in this manner. If the employer is providing the education facility in his own institution, okay, that is the own institution of the employer, or the employer has a tie-up with some institution, then exemption is available up to rupees 1000 per month per child. That means whatever expenditure has been incurred by the employer, it will be considered, and then there is an exemption of rupees 1000 per month per child, irrespective how many number of child that employee is having. So for example, understand that if the employer has incurred the cost of rupees 10,000 for the education facility of the employee's child, and such education facility is provided in the own institution of the employer, or the employer is having a tie-up with such institution, then an exemption is given under the head income from salary, which is of rupees 1000 per month for per child. That means only 9,000 will become the taxable value of the perquisite. I hope this is quite clear to you all, okay. So I hope you all have understood this part, okay. So let's revise this part again. Education facility provided by the employer to the employee's children, and such education facility is given in the own institution of the employer, or the employer is having a tie-up with some institution, then exemption is available up to rupees 1000 per month per child. But what if the education facility is provided by the employer to the employee's children in otherwise than this case? That means in institution where the employer is not having a tie-up, or the institution is not owned by the employer, then whatever expenditure has been incurred by this employer on the education of this employee's children, it will be considered, okay, in the computation of the income from salary of this employee. I hope this is quite clear to you all. So our part number 3 is complete. Let's revise it completely again. If the education facility is provided by the employer to the employee, then it is fully exempt. But if the education facility is provided by the employer to other than the employee, then it is fully taxable. But if the education facility is provided by the employer to the employee's children, and such education facility is provided in the own institution of the employer, or the employer is having a tie-up with any of the institution, in such institution the education facility is provided by the employer to the employee's children, then the exemption up to rupees 1000 per month per child is available to the employee, okay, is available to the employee. I hope this is quite clear. But if the education facility is provided by the employer to the employee's children otherwise than the institution in which the employer is having a tie-up, or otherwise in the institution in which the institution is not owned by the employer, so whatever expenditure has been incurred by the employer on the education of this employee's children, it will be fully taxable. That means it will be considered in the computation of the income from salary of this employee. I hope this is quite clear to you all. So the next are very easy and simple parts. So let's move on to our next part, which is fourth part, which says that if a free gas facility is given to an employee by the employer, then whatever facility has been given by the employer to this employee, it will be fully taxable, okay. The value of such similar gas facility will be given to you in the question. You have to consider that, and fully taxable means you have to consider that amount in the computation of income from salary of that employee. I hope this is quite clear to you. Similarly goes for electricity and water supply. So what if a free electricity or a free water supply facility has been given by the employer to the employee, then the value of such facility will be given to you. You have to simply consider that value and you have to add it in the computation of income from salary. I hope this is quite clear to you all. Okay, so let's move on to part number 5. Part number 5 says that if a transport facility is provided by transport undertaking. Okay, so what does this transport undertaking mean? You all might be thinking that we have already studied this part, but the answer is no, we have not studied this part. You are mixing two things. Okay, so I'll show you which part you are mixing. So come on, working note number 1, allowances. Okay, here in partly exempt allowances category, there we have studied this transport company allowances to the driver. Okay, so this and this part number 5 are two different things. Okay, that was a transport allowances given by a transport company. That means a logistic company is giving a transport allowances to whom they were giving to the driver. But in this case, in this part number 5, the case is different. The transportation facility is provided by the transport undertaking. That means railway is giving a transport facility to its employees, or similarly airways, that is flight facilities, are giving some of the facilities to its employees. So in that case it is also a perquisite. So how to value that perquisite so that the value of that perquisite will be taken in the computation of the income from salary. I hope this is quite clear. So I hope you understood what is this part number 5 is about. So this part number 5 is about transport facilities provided by the transport undertaking. That means transport facilities provided by the railways or airways or roadways by the local authority running the roadway facilities. Okay, in that companies also the employees might be working. To such employees the transportation facilities is provided. Then how to calculate the value of the perquisite? The value of the perquisite will be calculated in this manner: amount charged for the normal public. For example, understand that railway charges 600 rupees per month from a normal individual who is not an employee of this railway, but the railway is charging from its employees, okay, from the railway employees 300 rupees per month. Okay, that means there is a 50% discount. So whatever the discount the railway is given to his employees, that will be considered as taxable value of the perquisite. So that is what our formula is: amount charged from the normal public and amount recovered from the assessee. That means 50% amount was recovered. That means the remaining 50% will become the taxable value of the perquisite. I hope this is quite clear. So part number 5 comes to an end, which was talking about transport facility provided by the transport undertaking. I hope this is quite clear. Then the part number 6 is servant facility. Okay, if a servant facility is provided by the employer to the employee, okay, then it is fully taxable. Many of the time student mix this servant facility with the allowances in working note number 1, where we had studied helper allowances. Okay, and in the fully exempt category we have studied this helper allowances. So they mix this helper allowances with this part number 6, servant facility, and they consider this servant also as fully exempt. So this will create a huge mistake in the exam. Please do not do that, because in the exam there is no marking for the steps. Okay, but if you put a wrong figure, okay, if you put a wrong figure, that means the final answer will come wrong. So always be patient and learn all the acronyms that I have given, so that you do not make such silly mistakes. Okay, so servant facilities given by the employer to the employee will be fully taxable. I hope this is quite clear. So basically this servant facility is given by the employer. Okay, so basically when the servant facility is provided to the employee by the employer is only paying this servant. So whatever the amount is paid by this employer to this servant, it will be considered as the perquisite and it will be fully taxable. That means it will be taken in the computation of income from salary. I hope this is quite clear. Okay students, so now let's move on to part number 7. Part number 7 says that interest benefit when employer has given loan to the employee at the concessional rate of interest. So what is this? Understand it over here in a blank page. Okay, basically employer is giving a loan to employee. A loan of rupees 1 lakh has been given by the employer to the employee at the rate of 5%. So you can see that this 5% is a concessional rate of interest, because if this loan the employee would have taken from the bank would have easily charged on this 1 lakh the interest of at least 8.5%. So in order to find out this taxable value of the perquisite, there is a formula given. So let's read it from the start. If the interest benefit, that means a low interest has been charged by the employer on the loan given by the employer to the employee, that means the loan is given at a concessional rate of interest, then it is also considered as a perquisite. So how we have to calculate the perquisite? So let's understand this chart. If the loan has been taken for the disease like cancer, TB, etc., that is a specified disease, then the entire perquisite will be exempt. That means even if the loan is given at a concessional rate, it will be considered as fully exempt. I hope this is quite clear to you all. That means we will not calculate the value of taxable value of the perquisite so that we can take it in the calculation of income from salary, that is computation from income from salary. I hope this is quite clear. But if the loan has been taken from the employer otherwise for this diseases, then how to calculate the perquisite value? The perquisite value will be calculated in this manner. If the loan is taken up to rupees 20,000, then whatever will be the value of the perquisite, okay, value of the perquisite, it will be completely exempt. Okay, it will not be taken in the computation of income from salary. But if the loan is taken above rupees 20,000, the taxable value of the perquisite will be calculated in this manner. A loan amount, in our example we had taken 1 lakh, so 1 lakh into SBI's rate on the first day of the previous year, that is 2019-20, minus the interest rate of the company. So for example, come in this blank page again. Here, let's erase this. Okay, the employer has given a loan of rupees 1 lakh at the rate 5%. Okay, and this loan is given for otherwise purpose. Okay, that is otherwise from the disease purpose, and the employee is paying 5% interest on this 1 lakh. But SBI's rate of interest on first day of previous year 2019-20, that is on 1st April 2019, is at the rate 8.5%. Okay, since you can see that SBI's rate of interest is 8.5, which is higher than this concessional rate. So what we have to do, we have to calculate taxable value of perquisite in this manner. 1 lakh is the amount of the loan, and we have to write the SBI's rate of interest, and we have to subtract the concessional rate of interest as per the company, and then we have to calculate the taxable value of the perquisite. So the taxable value of the perquisite will become 3,500. I hope it is quite clear to you all. So that is what it is given over here. The taxable value of the perquisite will be calculated in this manner. If the loan has been given by the employer to the employee at a concessional rate of interest, and such loan is given otherwise than for the purpose of disease, and such loan is also more than 20,000, okay, then the taxable value of the perquisite will be loan amount into SBI's rate on the first day of the previous year minus interest rate of the company. I hope this is quite clear to you all. So our part number 7 also comes to an end. So let's move on to our next page. Okay, that is part number 8. Part number 8 says that food facility. In this format book, I have given this food facility. This food facility is a non-monetary perquisite. So the value of the food, okay. So for example, if Sudesco coupon is given, that's why we have ascertained the value of the food. But at times, the company do not give the Sudesco coupon. They keep the canteen facility, okay. In the canteen, they provide free lunch, okay. So free lunch amount will be written over here. The question will specify the value of such free lunch. We have to consider it over here, and we have to further reduce it with the exemption of rupees 50 per meal, okay, that is once in a day into number of days. I hope this is quite clear to you. So for example, understand it in this manner. The company is providing canteen facility, okay, and the cost of this canteen facility is per month say rupees 5,000, okay, per month cost this much it is, okay. But the employee is working only for 25 days, so 25 days into 50 rupees will be equal to 1250 rupees, okay. So that means 5,000 will be reduced by this 1250 rupees, and whatever the balance amount comes will become a taxable value of perquisite. I hope you all have understood this part, okay. This is very simple part, okay. So don't worry about this part, you will not make mistakes over here because all these parts are very simple, okay. Okay, so the next part in our working note number 2, that is taxable perquisite, is part number 9. if a credit card facility is provided by the employer to the employee, okay, then whatever cost has been borne by this employer for this credit card facility will be fully taxable. That means it will be considered in the computation of income from salary of this employee. I hope this is quite clear. So now let's move on to our next part, that is 10th part of our taxable perquisite. If the employer, okay, is providing the employee with the touring and accommodation facility when this employee is on tour, okay, on tour, that is on vacation, okay, then whatever this touring and accommodation cost has been borne by the employer will be considered in the employee's income for computation of income from salary. I hope this is quite clear. That's why fully taxable is written over here. Similarly, part number 11 says that if the employer, okay, employer bears the club expenses for the employee, then whatever cost has been borne by the employer, okay, for this club expenses will be taken in the computation of income from salary of this employee. That's why it is written over here fully taxable. Okay students, so now let's move on to our next part, that is 12th part. The 12th part says that if the gift is given by the employer, then whatever gift has been given by the employer, the value of such gift will be considered in the computation of income from salary of such employee, but such value of the gift will not be considered in the computation of the salary, that is income from salary of that employee, if the gift is up to rupees 5,000 per annum. That means if the gift is given in cash or if gift is given in kind, okay, that means any gift is given, okay, other than cash, then if such gift is up to rupees 5,000 per annum, then it will be fully exempt. That means it will not be taken in the computation of the income of the salary of this employee. I hope this is quite clear to you all. Okay students, so now let's move on to part number 13. Part number 13 says that if a use of asset facility is given by the employer to the employee, it will be considered as non-monetary perquisite firstly. So we have to calculate the value of such non-monetary perquisite, okay, and such value of the non-monetary perquisite will be taken in the computation of income from salary. I hope this is quite clear. So if the asset which is used by the employee is a computer or a laptop, then it will not be considered as non-monetary perquisite. Similarly, if the asset is a telephone, then it will also not be considered as a perquisite, okay. But if any other asset is used by the employee other than the computer, laptop or the telephone, the value of the non-monetary perquisite will be calculated in this manner. If such other asset is owned by the taxable value of this perquisite will be depreciation at the rate 10% on the cost of such other asset which is owned by the employer, okay. But if such other asset is hired by the employer, then whatever the higher charges has been paid by the employer for such other asset which has been used by the employee, okay, that will be considered as the taxable value of the perquisite. I hope this is quite clear to you all. Okay students, let's revise part number 13. Part number 13 says that use of asset facility. If the asset is a computer or laptop, it will not be considered as a perquisite. Similarly, if the asset is a telephone, it will not be considered as a perquisite. But if any other asset other than the computer, laptop or telephone is used by the employee and such asset, that means such other asset is owned by the employer, then the taxable value of the perquisite will be depreciation at the rate 10% of the cost of such other asset which has been owned by the employer and such asset is used by the employee. But what if the asset which is used by the employee and such asset is a other asset and such other asset is hired by the employer, then the taxable value of the perquisite will be higher charges paid by the employer. I hope this is quite clear. Okay students, so let's understand our last part, that is part number 14 of the taxable perquisite. This part 14 says that transfer of any movable asset. So if an employer is transferring any immovable asset to his employee either for free of cost or at a discounted rate means at a very lower rate, okay, then how to calculate the non-monetary value of the perquisite, okay. So for that this table is given and three types of assets are mentioned, okay, computer and electronics, car and all other asset other than this, okay. So let's understand that if the employer is giving the employee a computer or any electronics, okay, and the original cost of such computer is say rupees 50,000, okay, and the employer has used this computer for 2 complete years, okay, for 2 complete years, then we have to calculate a depreciation on this 50,000. How we will calculate depreciation for every completed years of usage? So it is specifically mentioned over here, depreciation has to be calculated for every completed years of usage. Okay, so how we will calculate that? 50,000, okay, less dep for year 1, which will be equal to 25,000, okay, and the WDV will be equal to 25,000. In the second year, the opening value of the asset will be 25,000. On this, depreciation will be calculated of 50%, which will be equal to 12,500, and finally 12,500 will become the value, okay. And if the employee has paid something to the employer in order to acquire such movable property at a concessional rate, for example, the amount of rupees 5,000 in order to take that laptop, we have to calculate the depreciation for every completed years of usage. So the depreciation we have calculated over here, we have to find out aggregate depreciation over the entire completed 2 years of usage. It will be equal to 37,500. I hope this is quite clear. So 37,500 will be reduced from this original cost, and further 5,000 will also be reduced from this original cost because it has been recovered from the employee as we have assumed. So let's find out the taxable value of the perquisite. The taxable value of the perquisite is 50,000 minus 37,500 minus 5,000, which is equal to 7,500. So this 7,500 will become a taxable value of the perquisite, and it will be taken in the computation of income from salary of the employee. I hope this is quite clear to you all. So let me erase all this, okay. This is very quite self-explanatory, okay. Don't worry that you are missing out something you want to copy and all. Don't worry, there is no need to copy all this stuff, okay. Any which ways, when you will solve the sums, that time you will see all this, okay. So similarly, if the asset is a car, then the original cost to the employer will be further reduced by the depreciation for the every completed years of usage. So why I am stressing on every completed years of usage? So if the usage of this car is say 1.5 years, then the depreciation will be allowed only for 1 year, okay, not for this half year. I hope this is quite clear to you all, okay. So if the question says that the asset was used for 1.5 years, so we have to consider only 1 year of depreciation. But if the question says that the asset was used for 2.5 years, then we have to consider debt for 2 years. I hope this is quite clear to you, okay. So similarly, in the last column, if the asset is any other asset other than computer or any electronics or car, then how to calculate the taxable value of the perquisite? The taxable value of the perquisite will be calculated in this manner: original cost to the employee of such other asset, then depreciation for every completed years of usage, but the rate of depreciation is 10% of SLM. In case of the car, the rate of depreciation was 20% of the WDV, and finally any amount which has been recovered from the employee will be further reduced, and whatever amount will be derived over here will become a taxable value of our perquisite. I hope this is quite clear. So finally, our working note number 2, that is taxable value of the perquisite, comes to an end, okay. So that means in our checklist, that means in our computation of income from salary format, which is acting as a checklist, we have completed till here, that is point number 6. I hope this is quite clear to you all. So let's move on to point number 7, which talks about gratuity, okay. So before understanding anything, we need to understand what does gratuity means, and after that we will understand working note number 4, okay. So come into our notes, okay. In the notes I have given the meaning of gratuity. What does gratuity means? Gratuity means a voluntary contribution made by whom? Made by the employer, okay, to whom? To the employee in appreciation of the services rendered by the employee over the period of his service. That means gratuity is kind of a post-employment benefit given by the employer to the employee. I hope this is quite clear to you all. So I hope you all have understood what does gratuity means. Gratuity means a voluntary contribution done by the employer to his employee in appreciation of the service rendered by the employee over the period of his service, okay. So earlier gratuity was a voluntary contribution, but after the incorporation of the POGA Act, okay, that is Payment of Gratuity Act, the employer has to pay a contribution to the employee, okay. So why I have introduced this word POGA, that means the Payment of Gratuity Act, because there is some of the provisions of POGA, okay, which we need to consider while calculation the gratuity income under the computation of income from salary of the employee, okay, who has received this gratuity, okay, who has received this what, who has received this gratuity from whom, from employer, okay. So for that, come to our format book and come to working note number 4, okay. So this is our working note number 4. Working note number 4 talks about gratuity. Okay, if an employee is receiving a gratuity from the employer, then whatever amount has been received by the employee as gratuity, it will not be 100% taxable, because there is an exemption available under section 10 subsection 10, that is a partial exemption available, okay. So the gratuity amount whichever is received, it will be further reduced by the exemption under section 10 subsection 10. I hope this is quite clear. So how this exemption will be available, we will understand it with the format, okay. So the first point says that if a government employee receives gratuity, then it is fully exempt, okay. That means 100% of the gratuity will be fully exempt to a government employee. I hope this is quite clear to you all, okay. But if the gratuity is received by an employee, okay, who is covered under the POGA Act 1972. So that is what I have explained you when I was explaining you this gratuity meaning. If a particular employee, okay, who is covered under the Gratuity Act, that is a Payment of Gratuity Act 1972, okay, and such employee has received this gratuity from the employer, then how such gratuity amount has been received by the employee will be considered in the computation of income from salary of the employee. That is what we will study over here, okay. So the gratuity received by the employee will be written over here, and then we will reduce a partial exemption available under section 10 subsection 10. So how to calculate the partial exemption under section 10 subsection 10? First is the actual amount received. Whatever the gratuities amount is received, we will write over here, or rupees 20 lakhs, or the third is the formula, okay. The formula says that 15 divided by 26 into latest salary per month into number of services completed, and here in bracket I have written round off. So what does this means? I'll explain it to you, don't worry about that. Whichever will be lower of this 3, because the value will be derived, and whichever value will be lower of this 3 will become our partial exemption under section 10 subsection 10. So let's come into a blank page, okay. Over here understand that Mr. A has completed 30.7 years of service in Reliance Industries Limited, which is a company, okay. And Reliance Industries Limited company is paying Mr. A gratuity of rupees 10 lakhs, okay. And Mr. A is covered by payment of gratuity, that is Gratuity Act 1972, okay. And the last, that is the latest, this latest salary and the latest salary per month of Mr. A is rupees 30,000 per month, okay. Basically in this example I have already given the latest salary per month detail of Mr. A, which is 30,000. So let's calculate the exemption available under section 10 subsection 10. So the first point says that actual amount received is say rupees 10 lakh, okay. That is what our question is saying. The actual gratuity which has been paid by Reliance Industries Limited to Mr. A is rupees 10 lakhs, okay, which is a post-employment benefit. Secondly, rupees 20 lakhs, okay. So we will write here 20 lakhs as it is, which is 20 lakhs maximum, okay. And third point says that 15 by 26 into latest salary per month into number of years of service completed, and then in the bracket it was written round off, okay. So what does this word means round off? That's why I have taken this entire example. So firstly we'll calculate this 15 by 26 into 30,000 per month. We'll keep it as it is into number of years of service completed. So that is what our formula over here was also saying. So let's calculate that. So the number of years completed is 30.7. Since 30 years and 7 months are completed, that means more than half is completed. That means it will be rounded off to a higher figure, that is 31. So we will write it over here as 31. Okay, and finally we will calculate the value as per this formula. So let's see how much it comes. 30,000 into 31 into 15 divided by 26, which is equal to 5,36,538. Okay, so we have derived this value. Okay, so whichever is lower of this three will be considered as exemption under section 10 subsection 10. So whichever is lower of this three is 5,36,538. So come into our format. The gratuity received by Mr. A was rupees say 10 lakhs. Okay, and the amount of exemption, that is partial exemption under section 10 subsection 10, is 5,36,538. Okay, so let me make it minus plus 10 lakhs, which is equal to 4,63,461. So this amount 4,63,461 will be taken into the computation of income from salary. I hope this is quite clear how to utilize this format. Okay, so let me erase all these things whatever I have written over here. Okay, so that you can receive a blank format. I hope you all have understood this part. Okay, so let's revise point number 2. If a gratuity is received by an employee and such employee, wait, I'll erase a part over here which looks like employees. Okay, okay, so let's revise point number 2. Point number 2 says that if a gratuity is received by an employee, okay, and such employee is covered under the Payment of Gratuity Act 1972, then how to calculate the amount of the taxable value of this gratuity? Okay, so gratuity received, we have to write how much ever he has been received, that SSE has received, who is covered under the Payment of Gratuity Act, which will be further reduced by partial exemption under section 10 subsection 10. Okay, how to calculate this partial exemption under section 10 subsection 10? Actual amount received or rupees 20,000 max or 15 by 26 into latest salary per month into the number of years of service completed, round off. So after comparing all these three, whichever is lower will become our partial exemption under section 10 subsection 10, which will be reduced from the actual amount, for example 10 lakhs. Okay, which will be reduced from this 10 lakhs, and whatever the balance amount will be taken into the computation of income from salary. I hope this is quite clear. So here is one technical word, that is latest salary per month. How to calculate latest salary per month? Latest salary will be calculated in this manner: latest basic salary per month plus latest entire dearance allowances per month. Okay, entire I have written over here. Why I have written entire? Because earlier we used to study dearance allowances recognized. So here there is no recognized. That's why I have written entire dearance allowances. So how to take this latest basic salary? So understand over here, in the 31st year, how much ever salary, whatever is the basic salary and whatever is the dearance allowances, which is the latest, will be considered. Okay, I hope this is quite clear. That means the last year, whenever he was employed, that month's or that year's monthly salary. So basically the last year in which he got retired, so in this last year per month, whatever salary, okay, whatever salary he was receiving will be considered as latest salary per month. I hope this is quite clear to you all. So how to calculate latest salary per month? Latest salary will be calculated in this manner: latest basic salary per month plus latest entire dearness allowances per month. I hope this is quite clear. Okay students, so now let's move on to our next part. Our next part says that if a gratuity is received by an employee who is not covered under the Payment of Gratuity Act 1972, then how to calculate the taxable value of the gratuity received by such employee who is not covered under the Payment of Gratuity Act? So the gratuity whatever has been received by the employee who is not covered under the POGA Act will be written over here, and it will be further reduced by the partial exemption under section 10 subsection 10. Okay, how to calculate the exemption under section 10 subsection 10 in case when the employee is not covered under the POGA Act 1972. So the manner is actual amount received, will write it over here, or rupees 20 lakhs maximum, or half into average salary per month into number of service completed, no fraction. That means in the example of Mr. A, there was a fraction that is 30.7 years and we rounded it off to 31 years. But in this case, when the employee is not covered under the POGA Act, what we will do is we will not consider this fraction. We will consider only the full completed years. That means he has completed 30 full years. So we will consider only 30 years and we will ignore this fraction. I hope this is quite clear to you all. Okay, in this part, okay, how to calculate the average salary per month. Average salary will be calculated in this manner: average basic salary per month plus average dearrence allowances, and such dearrence allowances should be recognized per month, okay, plus average turnover commission. What does average salary means? Average salary means average of the last month has to be taken excluding the retiring month. Okay, so come on to a blank page. Let's understand it over there. So understand that this is our SSC Mr. A. Okay, he has been employed for 30 years and 11 months. Okay, and he is not covered under POGA Act. I hope this is quite clear. So in the 31st year, the employee has worked for this many number of months, that is April, May, June, July, August, September, October, November, December, January, February. So this employee got retired on this month and the company is paying him a gratuity. Okay, so in order to calculate as per this formula, that is half into average salary per month, number of years of service completed, and ignore the fraction. So there we have to calculate average salary per month. How the average salary will be calculated? Average salary per month will be calculated in this manner: average basic salary per month plus average dearrence allowances recognized per month plus average turnover commission, and average of last 10 months has to be taken excluding the retiring month. That means the salary of this February will be excluded. So the salary was say rupees 30,000. For the month of May also it is 30,000, and for the month of June also it is 30,000. But from the month of July, this employee got a raise of 5,000 and his salary became 35,000. Okay, so 35,000. So that means for the first 3 months, 3 into 30,000 plus 7 into 35,000 will be divided by 10, and whatever the average will come, that will become the average salary. I hope this is quite clear. I hope which month you have to exclude. Okay, I hope you all are understanding. This was a 11th month detail: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So the 11th month in which he got retired, it will be excluded. I hope this is quite clear. But what if he had retired in the month of say May 2019? How you will calculate? So May month will be excluded. May month will become the 11th month, and we will calculate in the reverse order. So understand it: 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. So May, April, March, February, January, December, November, October, September, August, July. Okay, so the salary whatever he has received for this period, that is 19, 19, 19, 19, 18, 18, 18, 18, 18. So basically I am writing the year. Which year? Okay, is this July falling in? July is falling in 2018. August, from July to December it is falling in 2018, and from January to April it is falling in 2019. So the average of this 10 months will be calculated. I hope this is quite clear how to do that. Okay, so this is quite a lame thing to explain, but many of the time students do a mistake over this part also. They know the entire formula, but they do a mistake in calculating the average, and excluding the retiring month. Okay, so that's why I explained you. Don't feel irritated that why sir is explaining all such thing. This is all lame things to explain. Okay, no, it is not lame. In the exam you will definitely forget. That time you will think I should have listened this part. Okay, I have ignored this, that's why I am not able to answer this part. Okay, so let's revise this part number 3. Part number 3 says that if a gratuity is received by an employee who is not covered under the POGA Act 1972, then gratuity will be calculated in this manner: gratuity actually received, and it will be further reduced by the partial exemption under section 10 subsection 10. Okay, how to calculate the partial exemption under section 10 subsection 10? If an employee is not covered under the POGA Act 1972, it will be calculated in this manner: actual amount received, or rupees 20,000 maximum, or half into average salary per month into number of years of service completed. We have to ignore the fraction. Okay, and the average salary, this average salary will be calculated in this manner: average basic salary per month, average dearance allowances recognized per month, plus average turnover commission. Okay, and the average of last 10 months has to be taken excluding the retiring month. I hope this is quite clear to you all. Don't worry, after completing our entire table, that is this computation of income from salary, we will solve few sums. Okay, that time you'll come to know things in a better manner. Okay, so don't feel disheartened that only theory we are studying. See, once if you have studied this theory, automatically things will become easy for you. So let's read the note given under this working note number 4 for gratuity. Okay, so the note says that if a gratuity is received by the employee during his service period, then fully taxable. That means gratuity should be received after employment. Okay, after completion of the employment. That's why it is called as post-employment benefit. But if this gratuity has been received by the employee during his service period, then it will be fully taxable. Then no exemption, no partial or no full exemption under section 10 subsection 10. I hope this is quite clear. But the second point in the note says that if the gratuity is received from a former employer, and again gratuity is received from the another employer, then the earlier gratuity exemption will be reduced from the maximum 20 lakhs limit. Okay, so this point number 2 looks this much small, but it is not this much small. I have to take a blank page to explain you this part. Okay, so understand this. Mr. A is working with Airtel. Okay, and he got retired after serving for 11 complete years. Okay, Airtel paid gratuity of rupees 5 lakh, but exemption available under section 10 subsection 10 as per our calculation came to around say rupees 3 lakh. So this is computed figure. Okay, I am giving you a computed figure only. So in order to keep the explanation simple, so this was the exemption received by the SSC, that is our Mr. A. So what is this point number 2 saying? Point number 2 is saying if a gratuity is received from a former employer and again the gratuity is received from another employer, then the earlier gratuity exemption will be reduced from the maximum 20 lakhs limit. So let's understand that part. So after this 11 years of service, Mr. A started working with Jio. Okay, he completed 9 years in Jio. Okay, so Jio paid gratuity of rupees 10 lakhs to this Mr. A, but exemption available under section 10 subsection 10 is rupees 5 lakh. Okay, so this is also computed. So what I wanted to explain to you was, so while calculating exemption under section 10 subsection 10, our formula says that actual gratuity received, and there is a rupees 20 lakhs maximum limit. So understand that if this employee Mr. A has been employed 2 times, okay, and he has received gratuity 2 times, then the gratuity which he has received from the former employer, that is the earlier employer, which was of rupees 3 lakh, this 3 lakhs will be reduced from this maximum limit and the maximum limit will become 17 lakhs. I hope this is quite clear. So that is what it is given in the notes in the format book. Okay. So note number 2 says that if the gratuity is received from the former employer, that means the earlier employer, and again the gratuity is received from the another employer, then the earlier gratuity got exempted will be reduced from the maximum 20 lakhs limit. So as you can see that the earlier gratuity exemption was of rupees 3 lakh. So this 3 lakhs will be reduced from this maximum limit of 20 lakhs and the maximum limit will become 17 lakhs. Okay. I hope this is quite clear to you all. Okay. So we have already completed up to gratuity. Now let's move on to next line item, that is point number 8 under computation of income from salary. Point number 8 is talking about uncommuted pension. Uncommuted pension is fully taxable to all employees. What does all employees means? Government employees as well as other employees. I hope this is quite clear. So before understanding anything, we need to understand what does uncommuted pension means. In order to understand what does uncommuted pension means, come into the notes. Okay. In the notes I have given what does uncommuted pension means. Uncommuted pension means monthly retirement benefit provided to employee by the employer. That means understand that this is our assessee. Okay. This assessee has worked under an employer, okay, for say 10 years. After completing this 10 years, Mr. A, this is our assessee Mr. A, took retirement. Okay. So the employer decided that Mr. A will receive monthly pension of rupees 10,000 per month, okay, till this assessee Mr. A dies. I hope this is quite clear to you all. Okay. So basically this uncommuted pension is a post employment benefit. I hope this is quite clear to you all. So after completing a certain period of years in a company, the employer gives a pension to the employee after his retirement. So that is what is given over here. Uncommuted pension means monthly retirement benefit provided to employee by the employer. I hope this is quite clear. So let's come back to our format book again and let's understand the next point. The next point is point number 9, which talks about commuted pension. What does commuted pension means? We will understand in the note, and after that we will understand working note number 5. So let's come into the notes. Okay. Here what does commuted pension means I have given here. So commuted pension means lump sum amount taken by the employee by selling the whole or part of the future pension amount at a present date. So we need to understand this at a blank page. Okay. So let's come into a blank page. This is our assessee Mr. A. Okay. He is receiving uncommuted pension of rupees 10,000 per month, and this uncommuted pension will be received by him till he dies. Okay. So basically what does this Mr. A does is Mr. A asks his employer to commute his pension. So basically what does this commute word means? Commute means selling. Simply understand it as selling. So basically he asks his employer to sell his pension. So basically he is receiving 10,000 per month. He is asking his employer to commute, that is sell his pension up to 60%. I hope this is quite clear. So basically what he is saying is he wants this 6,000 rupees per month, that is on this 10,000 per month into 60%, which comes to around 6,000 per month. So he wants this 6,000 per month, that is this future cash inflows to be encashed at present date. Okay. And the remaining 4,000, that is 40% of this pension, he is keeping it as it is. So basically he wants this 4,000 to be received per month, that is he wants to keep this 4,000 as uncommuted pension. I hope this is quite clear to you. So I hope you all are understanding what does commuted pension means. So basically a commuted pension means that Mr. A is receiving 10,000 per month uncommuted pension. He wants his 60% of this 10,000 per month, that is 6,000 per month, to be encashed at a present date. That means he wants his 6,000 that he is going to receive in the future. Okay, but he does not want this 6,000 to be received in future. He wants it to be calculated at the present value at a present date. Okay, and he wants the lump sum amount of this 6,000 per month uncommuted pension. I hope this is quite clear to you all. And he wants this 6,000 to be commuted. Okay, and the remaining 4,000 he wants it to be as it is. That is, he wants it to remain uncommuted. That means he wants this 4,000 to be received by him every month. Okay, every month till he dies. I hope this is quite clear to you all. So I hope you all have understood this part. Okay, commuted pension means lump sum amount taken by the employee by selling the whole or part. So what we have studied, 60%, right? 60% was part selling of the pension. Okay, but there is a possibility that Mr. A can sell his 100%, that is the whole uncommuted pension. That means in our example over here, he will sell this entire 10,000. Okay, and there will be no uncommuted portion. So that is also allowed. That is what only it is given over here. Whole or part of the future pension amount at the present date is sell. I hope this is quite clear. So I hope you all have understood what does commuted pension means. Basically, commuted pension means selling the future cash inflows at a present rate. I hope this is quite clear to you all. Okay, now let's come into the format book. Okay, in the format book, here is the commuted pension. So we need to see working note number 5. So let's come into the working note number 5. Working number 5 talks about commuted pension. Okay, commuted pension is exempt under section 10 subsection 10a. There is a full exemption and as well as there is a partial exemption. So let's understand it. Okay, here also the same thing is given. Commuted pension means the yearly pension that is to be received by the assessee is sold by the assessee at a lump sum consideration. I hope you all have understood this by now. Okay, okay students, so let's understand point number 1. Point number 1 says that if a pension is commuted by a government employee or by a local authority employee or by a civil service employee or by a defense employee or by a judge of a high court or by a judge of a supreme court, then whatever amount has been commuted by the employee, that is the assessee, will be fully exempt. I hope this is quite clear. So that is what is given under section 10 subsection 10a. I hope this is quite clear. Okay students, so now let's move on to other employees. Other employees means other than this employees mentioned over here. Okay, so if an other employee is receiving a commuted pension, how it will be calculated? Okay, so here it is written taxable in following manner. Point number A says that if such employee is receiving gratuity, okay, whether the employee is covered under POGA or whether he is not covered under POGA. Okay, the point important over here is if an assessee, that is the employee, is receiving gratuity, then commuted pension will be calculated in this manner. Commuted pension received by the employee, okay, received by the employee, we will write over here, and it will be further reduced by this formula. The formula says 1/3 of the commuted pension received. That means whatever the lump sum commuted amount has been received by the assessee, which we have written it over here, we will write it over here again, and it will be divided by 1/3, which will be further divided by the percentage of computation. So basically in this example, 10,000 was uncommuted pension. Okay, but here the assessee has commuted the pension up to 60%. So here that percentage will be written, that is 60% will be written over here, and whatever amount will be derived after calculating this equation, we will write it over here, and if any balance amount over here, we will consider it in the computation of income from salary. I hope this is quite clear to you. Let's move on to point number B. Point number B says that if such employee is not receiving gratuity, then how to calculate the commuted pension. The commuted pension, which will be taken into the computation of the income from salary, will be calculated in this manner. Commuted pension that has been actually received will be written over here, and it will be further reduced by the amount whichever is derived after calculating from this equation. So what does this equation says? Half of commuted pension received. That means whatever amount we will write it over here, we will write that same amount over here, and we will divide it by half, and then we will divide the entire this equation, the numerator, with the percentage of pension commuted. That means in our example it was 60%, so it will be divided by 60%. Okay, there can be a possibility that the pension is commuted up to 70%. Whatever percentage has been given in the question, we have to write it over here. At times there is a fraction also given, like 1/3 of the pension is commuted. Okay, or 2/3 of the pension is commuted, or 1/4 of the pension is commuted. So that fraction we will mention it over here if percentage of pension is not given over here of commutation. I hope this is quite clear. So let's revise this. Working note number 5. Working note number 5 talks about commuted pension. Commuted pension is exempted under section 10 subsection 10A, and it is divided into two categories, that is fully exemption category and partly exemption category. Commuted pension means that yearly pension that is to be received by the assessee is sold by the assessee. Okay, so let's revise the format now. Point number 1 says that pension commuted by the government employee, or by a local authority employee, or by a civil service employee, or by a defense employee, and by a judge of a high court, or by a judge of a supreme court, then whatever amount has been commuted by this employees, it will be fully exempt. I hope this is quite clear to you all. Then second point says that if any other employee other than the employees mentioned in point number 1, then the commuted pension will be taxable in the following manner. Point number A says that if such employee is receiving gratuity, whether it is an employee who is a POGA person or who is not a POGA person, okay, that means a employee who is covered under POGA or who is not covered under the POGA, then it will be calculated in this manner. Commuted pension actually received, which will be further reduced by the amount which has been derived after calculating this equation. This equation is 1/3 of, that means 1/3 into commuted pension received, that means whatever amount we are writing here, we will consider it here again, and this entire numerator will be divided by the denominator. The denominator is percentage of pension commuted, or many of the time the fraction will be given, we have to simply mention the fraction over there. I hope this is quite clear, and whatever amount we will derive over here, it will be further taken into the computation of the income from salary, okay, in our main working. I hope this is quite clear to you all. Point number B says that if such employee is not receiving gratuity, then commuted pension will be calculated in this manner. Commuted pension actually received, okay, and it will be further reduced by the amount, and this amount will be derived after applying this equation. The equation says that half of commuted pension, that means the amount written over here, will be taken over here, and the entire numerator will be divided by the percentage of the commutation. I hope this is quite clear by now, okay, and whatever commuted pension we will derive over here or here, okay, we will take it into the computation of income from salary. I hope this is quite clear to you all by now, okay. So let's move into our main format again, that is computation of income from salary. Okay students, so now let's move on to our next point, that is point number 10, which talks about leave encashment. Okay, so what does leave encashment means? We need to understand it in a blank page. So let's come into the blank page, understand it. Mr. A is working in Reliance Industries Limited, and it is a company, okay. Reliance Industries Limited gives Mr. A 30 days paid leave, okay. But since Mr. A is a hard-working employee, he can only take 10 days paid leave, okay. So that means he is unable to take his 20 days paid leave because he is occupied with the work. So what does the company says? Company asks Mr. A to carry forward this 20 days paid leave in the next period, okay, that is in the next previous year. So after 5 years, okay, when Mr. A is getting retired, Mr. A has accumulated 100 days of paid leave, okay. So in other words, we can say it as 20 days paid leave accumulated for 5 years, which is equal to 100 days. I hope this is quite clear. So Mr. A asked Reliance Industries Limited to pay for this 100 days, because since this 100 days was the paid leave, and because of working for this company he has not taken this 100 days, so kindly pay for this 100 days. And if the Reliance Industries Limited pays for this 100 days to Mr. A, it is known as leave encashment, okay. So basically leave encashment is paid, okay, is paid after retirement, that means during retirement only, that means during retirement only. Okay, very few companies pay it during employment period also. Okay, so when the assessee, that is our Mr. A, receives a money, that is a leave encashment money from the company for not taking the leaves, that is also taxable, means that is also taken into the computation of the income from salary. I hope you all understood this. What does leave encashment mean? Simply it means that some leaves are allotted to the assessee, but due to the work the assessee was not able to take that leave, so in order he has not taken the leave, he is asking the company to him the compensation pay him the compensation for not taking such leaves. I hope this is quite clear to you all. Okay, so now let's understand working note number 6. Okay, so come to working note number 6. Working note number 6 is about leave encashment. Leave encashment is exempt under section 10 subsection 10 double A. It is exempt under two categories, that is fully exempt category as well as partly exempt category. So let's understand the format now. The format says that if a leave encashment is received by a government employee, then whatever amount has been received as leave encashment, it will be fully exempt. Okay, that is what I have written it over here. But if other employees are receiving leave encashment, then it will be partially exempt. How it will be partially exempt, we need to see it over here. Okay, so leave encashment actually received, we will write it over here, and then we will reduce it with the exemption available under section 10 subsection 10 double A. So in order to calculate exemption, that is a partial exemption under section 10 subsection 10 double A, there is a formula which says that amount received, that is the leave encashment actually received, or 10 into average salary per month, or leave credit into average salary per month, or 3 lakh maximum, whichever is lower out of this 4, we will consider it over here, and any balance will be taken into the outer column, and this balance amount will be taken into the computation of income from salary. I hope this is quite clear to you all. Okay, so there are two technical words that we need to understand, that is average salary per month and leave credit. Okay, what does average salary per month means? Average salary per month means average basic salary per month plus average dearness allowances recognized per month plus average turnover commission per month. Okay, I hope this is quite clear to you all. Okay, we have already studied this formula in earlier formats also. Okay, so this is not so difficult. Okay, but the difficult point is over here. Here students make mistake. So what does leave credit means? Leave credit means total leaves available per year. Okay, but maximum 30 only, that is for per years divided by 30 days slash 1 month. So how to calculate leave credit we need to understand. Okay, so in order to understand that, come into a blank page. Okay, over here understand that Mr. A, okay, accumulated leaves, okay, in following manner. Year 1 of his service, he had accumulated 20 days. Okay, in year 2 he had accumulated 30 days. Okay, in year 3 he had accumulated 40 days. Okay, in year 4 he had accumulated 10 days. Okay, in year 5 he has accumulated 50 days. Okay, these all are the paid leaves that have been accumulated by Mr. A. Okay, and in the 6th year he has accumulated 5 days. Okay, and in 7th year he has accumulated 20 days. Okay, so we need to make a total of this. Okay, so let's come into the format. Okay, in the format we have studied that the leave credit will be available in the following manner: total leaves available per year, that is per year leaves can be available up to maximum 30 only. Okay, so let's come back to the blank page. Okay, in the first year he had 20 days of accumulated leaves which he can take. Okay, but if he is not taking such 20 days leave, he can sell this leaves at the time of the retirement. Okay, so for this first year he can take this entire 20 days leaves. Okay, for the second year also he can take entire 30 days leaves, but in the third year he has 40 days leaves, okay, which he has not taken. Okay, so for this 40 days, maximum 30 days leaves can be allowed. Okay, in order to take exemption. Okay, in order to take exemption under section 10 subsection 10 double A, that is the partial exemption. Okay, similarly in the year 4 all 10 days leaves can be taken, but in the 5th year maximum 30 days leaves can be taken in order to calculate this leave credit. I hope this is quite clear to you all. I hope you all are understanding it now. In the 6th year, he can take all the 5 days, and in the 7th year, he can take all the 20 days. Okay, so we need to total all this. Okay, 20 plus 30 is equal to 50. 50 plus 30 is equal to 80. 80 plus 10 is equal to 90. 90 plus 30 is equal to 120. 120 plus 25 is equal to 145 days. Okay, so leave credits is equal to 145 days, okay, divided by 30 days, okay, which will be equal to 4.833 days. Okay, so whatever this amount we have derived, okay, we will mention it over here, okay, where we will mention in place of leave credit, that is 4.833 into average salary per month. Whatever will be the average salary, it will be multiplied with that. Okay students, so let's understand the note. Note 1 says that if leave encashment is received by the employee during his service period, then it is fully taxable. So that is what we have understood it over here in our blank page when we were understanding what does leave encashment means. Over here I said it, leaves are encashed during retirement or during the period of employment. Okay, so if the leaves are encashed during the period of employment, whatever leave encashment has been received by the assessee, it will be fully taxable. In other words, it will be taken in the computation of income from salary. I hope this is quite clear. Let's understand note number 2. Note number 2 says that if leave encashment received from former employer and again leave encashment is received from another employer, then earlier leave encashment exemption which was available to the employee, that exemption will be reduced from this maximum limit of 3 lakhs. I hope this is quite clear because we have already studied a similar point in a gratuity. Okay, so see it over here in note number 2. Here also it is given that only if gratuity is received from the former employer, okay, and again gratuity is received from another employer, then earlier gratuity exemption will be reduced from the maximum 20 lakh. Okay, I hope you all have understood this point. Okay, so here our working note number 6, that is leave encashment, comes to an end. Okay, okay students, so now let's move on to point number 11. Point number 11 under computation of income from salary is about retrenchment compensation. Okay, so what does retrenchment compensation means? It is given in the notes. Okay, we will understand it from the notes and then we will understand working note number 7. So let's come to the notes. At the bottom, retrenchment compensation is there. Retrenchment compensation means any payment received by the employee, okay, on termination, that is cancellation of his contract of service due to incapability of the company to continue his or her service. That means companies become incapable to keep or to hire this employee, okay, but the company and the employee both were having a contract. Okay, since the company is terminated, that means cancelling the contract of service of this assessee. That's why the company is paying this assessee a retrenchment compensation. I hope this is quite clear to you. So let's move back to our format book. Okay, and now let's move to working note number 7 where retrenchment compensation is given. Okay, retrenchment compensation, that is working note number 7, is given where working note number 6 is there. At the bottom there is working note number 7. Okay, okay students, so let's understand working note number 7. Working note number 7 is about retrenchment compensation. So if an assessee receives an retrenchment compensation, then such assessee is also eligible to get exemption under section 10 subsection 10b, that is a partial exemption. But how to calculate the retrenchment compensation amount, okay, over here, and finally take it into the computation of the income from salary? Let's understand it from this table. Okay, so firstly we need to write the amount received, that is the retrenchment compensation amount actually received from the company or from the employer over here, and we will reduce it, that is we will reduce it from the exemption under section 10 subsection 10b. How to calculate the partial exemption under section 10 subsection 10b is given over here. First we will calculate the amount as per the Industrial Dispute Act. The formula is 15 into average pay into number of years of service. The number of years of the service can be rounded off. Okay, we know what does round off means by now. Okay, so I don't need to explain it to you again. Okay, many of the times in exam, amount calculated by Industrial Dispute Act is simply provided to you, but if it is not provided, they will give you these details of average pay and the number of years of service, okay, that you have to substitute in this formula, and you have to remember this 15. Okay, so the formula is 15 into average pay into number of years of service or the amount actually received, or rupees 5 lakh max, whichever is lower of this 3 will be considered over here, that is the partial exemption under section 10 subsection 10b, and whatever the amount is balanced and is taken out over here, it will be considered in the computation of income from salary. I hope this is quite clear to you all. Okay, so let's revise our working note number 7, which is retrenchment compensation. If received by the assessee, then such assessee will get an exemption under section 10 subsection 10b, that is a partial exemption. How to calculate the retrenchment compensation so that we can take it into the computation of income from salary? Let's revise this table. The table says that amount received, that means actual retrenchment compensation received, will be considered over here, which will be further reduced by the partial exemption under section 10 subsection 10b. How to calculate the partial exemption under section 10 subsection 10b? It is calculated in this manner. 1. Amount calculated by the Industrial Dispute Act. The formula is 15 into average pay into number of years of service, or amount received, that is the actual retrenchment compensation amount received, or rupees 5 lakh max, whichever is lower of these three will be taken over here, and whatever is the balance will be taken into the computation of income from salary. I hope this is quite clear to you all. Okay, so come to the main format now. Okay, so we have completed till here, that is point number 11. So let's move on to point number 12 of computation of income from salary, which talks about voluntary retirement compensation. So what does this voluntary retirement compensation means? As the name suggests, the assessee voluntarily wants to take retirement from the company. So if the assessee is receiving a voluntary retirement compensation, how to calculate the amount of the voluntary retirement compensation, which will be considered over here in order to compute the income from salary, that is the gross salary of this assessee. So for that, working note number 8 is there. So let's come to working note number 8 now. This is working note number 8. Working note number 8 is about voluntary retirement compensation. So if an assessee is receiving a voluntary retirement compensation, there is an exemption available under section 10 subsection 10c, and this is a partial exemption. Okay, so let's see how to calculate the voluntary retirement compensation so that the amount can be taken in the computation of income from salary. I hope this is quite clear. So voluntary retirement amount actually received by the assessee will be considered over here, which will be further reduced by the partial exemption under section 10 subsection 10c. How to calculate partial exemption under section 10 subsection 10c? It is given over here. First, latest salary per month into number of months of service remaining. So we need to consider number of months over here, okay, and not number of years. Many of the time students writes over here number of years only. That's why I've written it in red over here so that you do not make a mistake. Or 3 into latest salary per month into number of years of service completed, and ignore the fraction. By now I hope you all have understood what does ignoring the fraction means. Okay, we don't need to round off, we need to simply consider all completed number of years of service only. Okay, that means not even a half of the year will be considered in this. Okay, I hope this is quite clear to you all. Or amount received, or 5,000 maximum, whichever is lower of this 4 will be considered over here. Okay, and the balance amount, whatever will be derived over here, it will be taken into the computation of income from salary. I hope this is quite clear. So what does latest salary per month means? Latest salary per month means latest basic salary per month plus latest dearrence allowances recognized per month plus latest turnover commission per month. I hope this is quite clear. So let's revise working note number 8. Working note number 8 is about voluntary retirement compensation, and the assessee, if receiving a voluntary retirement compensation, then such assessee will also be eligible to take an exemption, that is a partial exemption under section 10 subsection 10c. Okay, so how to calculate voluntary retirement compensation so that it can be taken into the computation of income from salary? It can be calculated with the help of this table. First, voluntary retirement compensation amount we will consider here, and it will be further reduced by the partial exemption under section 10 subsection 10c. How to calculate partial exemption under section 10 subsection 10c? First, latest salary per month into number of months of service remaining, or 3 into latest salary per month into number of years of service completed, and we need to ignore the fraction over here. Okay, or amount actually received, that means the voluntary retirement amount that we have written over here, we will consider it a year again, or rupees 5 lakhs max, whichever is lower of this 3 will be considered over here, and if any balance, it will be taken into the computation of income from salary. I hope this is quite clear. What does latest salary per month means? Latest salary per month means latest basic salary per month plus latest dearrence allowances recognized per month plus latest turnover commission per month. I hope this is quite clear. So there is a note for working note number 8, that is voluntary retirement compensation. What is this note? This note says that no benefit under section 10 subsection 10c will be available if the assessee is receiving salary from a proprietor or from a firm or from an LLP. Okay, so now let's understand the note of this working note number 8, voluntary retirement compensation. This note says that no benefit under section 10, subsection 10C, that is the partial exemption under section 10, subsection 10C, available if the assessee is receiving salary from a proprietor or from a firm or from an LLP. I hope this is quite clear to you all. Okay, so let's move back to our main format now. So the next point is point number 13 in our computation of the income from salary. So our point number 13 talks about medical facility. Okay, so what does medical facility means? Let's understand it with the help of working note number 9. So let's come to working note number 9. Okay, working note number 9 is given where working note number 8 is at the bottom. Okay, working note number 9 is about medical facility provided by the employer. If the employer is providing the medical facility to the employee and such medical facility is provided in India and such medical facility is provided from Grey Hospital. Okay, what does this Grey Hospital means? Grey is an acronym. G stands for government, R stands for recognize, E stands for employer. So if the medical facility is provided by the employer to the employee and such facility is provided in India and in India in such hospital, with such hospital, government hospital, recognized hospital or employer's own hospital, then whatever medical facility has been provided by the employer to the employee, okay, it will be fully exempt. That is what is given over here. Otherwise, that means otherwise than this Grey Hospital, if the employer provides the medical facility to the employee in India other than this hospital, then whatever medical facility has been provided by the employer, it will be fully taxable. I hope this is quite clear and self-explanatory. But if the medical facility has been provided by the employer to the employee and such medical facility has been provided outside India to the employee, so what all medical facilities are covered? Let's understand. Cost of stay and cost of treatment. So if the employer is providing the medical facility of cost of stay and cost of treatment to the employee and such facility is provided outside India, then the exemption will be available as per RBI's guideline and such exemption will be provided in the question. Okay, so for example, understand that if the employer is bearing a cost of rupees 1 lakh for the cost of stay and the cost of treatment for the employee, okay, outside India, okay, then an exemption as per the RBI guideline is also provided, say of rupees 50,000. Okay, then how much will be the value of this medical facility that will be taken in the computation of the income from salary? Let's see. Employer has given 1 lakh, but the exemption available as per RBI's guideline is 50,000. That means remaining 50,000 will be taken in the computation of income from salary. I hope this is quite clear. But if the medical facility provided by the employer to the employee is cost of travel for abroad, that means the medical facility that has been provided by the employer to the employee is cost of travel for abroad, then how it will be taxable? That means how it will be taken into the computation of income from salary. Let's see it over here. If the gross total income is 2 lakh per annum of the assessee, if the gross total income GTI, that means gross total income, is 2 lakhs per annum of the assessee, then full amount is exempt of the cost of travel for abroad. Okay, that means this employee is a poor employee because he is having a gross total income of only 2 lakhs. That's why the employer is paying him, that means the employee, the cost of travel to abroad also. So whatever the cost of travel has been received by this poor employee who is earning a gross total income of rupees 2 lakhs per annum, then the whatever amount has been received by the employer for traveling, that is the cost of traveling for abroad, will be considered as fully exempt. But otherwise, that means if the employee's, okay, salary is more than this gross total income of rupees 2 lakh per annum, then whatever amount, that is the medical facility of cost of travel for abroad paid by the employer for employee's behalf will be fully taxable. That means it will be taken into the computation of income from salary. I hope this is quite clear to you. Similarly, if a medical insurance premium is paid by the employer, it will be fully exempt in the hands of the employee. Okay, or else if the medical insurance premium is paid by the employer directly to the insurance company, even then also it will be fully exempt. That means it will not be considered in the computation of income from salary. I hope this is quite clear. Okay, so let's revise our working note number 9. Working note number 9 is about medical facility provided by the employer. If the medical facility is provided by the employer in India and such medical facility is provided in Grey Hospital, what does Grey Hospital means? Government hospital or recognized hospital or employer's own hospital, then whatever cost for this medical facility has been bared by this employer for this employee, it will be fully exempt. That means it won't be taken into the computation of the income from salary of employee. I hope this is quite clear. Otherwise, it will be fully taxable. I hope this is quite clear. But if the medical facility is provided by the employer outside India, that means the medical facility is cost of stay and cost of treatment, then the exemption is available as per RBI's guideline. Okay, and such exemptions detail will be provided in the exam. I hope this is quite clear to you all. So, for example, the employer has provided 1 lakh, the exemption is 50,000. The balance 50,000 will be considered in the computation of the income from salary in case when the medical facility has been provided by the employer outside India for the cost of stay and the cost of treatment. I hope this is quite clear. Similarly, if the medical facility has been provided by the employer and such medical facility is cost of travel to abroad, then if the gross total income of the employee to whom such cost of travel is paid, it will not be considered in his computation of income from salary if the gross total income of such employee is 2 lakhs per annum. I hope this is quite clear. Otherwise, whatever the cost of travel has been borne by the employer for the employee, it will be taken into the computation of the income from salary. I hope this is quite clear to you all. Similarly, if the mediclaim insurance premium paid by the employer, whatever amount has been paid by the employer on behalf of the employee is fully exempt. I hope this is quite clear. In other words, it will not be taken into the computation of income from salary. I hope this is quite clear. So let's move to our main format again. So we have completed up to point number 13, that is medical facility. Okay students, so now let's understand point number 14. Point number 14 talks about professional tax paid by the employer. If the professional tax is paid by the employer, whatever the professional tax amount has been paid by the employer, it will be considered in the computation of the income from salary. I hope this is quite clear. But if the professional tax is paid by the employee, okay, it will not be considered over here because actually the professional tax has to be borne by the employee. But if the employer is bearing it, that's why it has been included in the income from salary of the employee. I hope this is quite clear. But if the professional tax is paid by the employer or by the employee, there is a deduction available under section 16 under subsection 3, which says professional tax paid by either employer or by employee, it will be reduced up to rupees 2,500. Okay, so if we add 2,500 over here, for example professional tax paid by the employer, and we add 2,500 over here, we will get a deduction of rupees 2,500 here. I hope this is quite clear. But 2,500 is a maximum limit. Okay, but for example understand that if a professional tax is paid by the employer of say rupees 5,000, and this 5,000 we have considered it in the income from salary of the employee. Okay, but the deduction will be available of only 2,500 only. I hope this is quite clear to you all. So this was quite a self-explanatory point. Okay, point number 16 and point number 17 we have studied already when we were studying section 15. Okay, that time we have studied arrears of salary as well as advance salary, so we don't need to repeat again over here. Okay, so the last point remaining under computation of income from salary is employers provident fund contribution. So in order to understand that, we need to go to working note number 10. This is our last working note number 10. Okay, after that we will understand deduction under section 16, the remaining two subsection, that is 1a and 2. Okay, so let's come to our working note number 10 now. Working note number 10 is about provident fund employers contribution. So here is a big table. We need to understand this table because many of the times students do not understand this provident fund contributions table. Okay, it is also given in the study material also. Be very patient. Okay, I have modified this table as per the student's convenience. Okay, so please be little patient and little calm. Only then you will understand what is this. Okay. Okay students, so now let's understand point number 1 under this particulars. It is about employees contribution to following. If an employee makes a contribution to a statutory provident fund, then whatever contribution has made by this employee, it is available as deduction. Okay, deduction under section 80C. I hope this is quite clear. If you remember Mr. Puneet's LIC, there we have studied in that P provident fund. Okay, so if the employee or the assessee is contributing to a statutory provident fund or to a recognized provident fund, whatever amount has been contributed by this employee, it will be allowed as deduction under section 80C. I hope this is quite clear. But there is a maximum limit of 1,50,000 under section 80C as well as under section 80 CCE. I hope this is quite clear, and I hope you all remember that But if the employee contributes to an unrecognized provident fund, then whatever contribution has been made by this employee to this unrecognized provident fund, there will be no deduction available under section 80C. I hope this is quite clear to you all. Similarly, in point number 2, if the employer makes a contribution to the following means statutory provident fund. Okay, if the employer is making a contribution to the statutory provident fund, then whatever contribution has made by this employer, it will not form part of the employee's salary. That means it will not be considered in the computation of the income from salary. I hope this is quite clear. Similarly, if the employer's contribution is done to the following, that is the unrecognized provident fund, then whatever contribution has done by the employer to this unrecognized provident fund, okay, it will not form part of the employee's salary. I hope this is quite clear to you. But if the employer's contribution is done to a recognized provident fund, then the whatever contribution has done by this employer to this recognized provident fund, it will be allowed up to 12% of the salary. Okay, about 12% of the salary, whatever amount has been paid by this employer, it will form part of income from salary. That means the amount will be taken into computation of income from salary. I hope this is quite clear. So let's understand this point only once again. What does this point says? If an employer makes a contribution to a recognized provident fund, okay, then the contribution made by the employer to this recognized provident fund will not form part of the employee's salary, but up to 12% of the salary, it will not form part of the employer's salary. If the employer has made a contribution above this 12% of the salary to the recognized provident fund, then whatever is the difference, okay, the actual contribution, okay, will be reduced by this 12% of the contribution, and whatever is the balance, okay, whatever will be the balance will be taken into the computation of income from salary. So this is what this point is talking. I hope this is quite clear to you all by now. So let's revise up till here first. If an employee is contributing to a statutory provident fund, so whatever amount has been contributed by this employee, it will be fully exempt under section 80C, that is deduction under section 80C. But if an employee is making a contribution to a recognized provident fund, then whatever the contribution has done by this employee will be fully allowed as deduction under section 80C. Similarly, if an employee makes a contribution to an unrecognized provident fund, then whatever contribution has been made by this employee to this unrecognized provident fund, it will not be allowed as deduction under section 80C. I hope this is quite clear to you all. In point number 2, if an employer makes a contribution to a statutory provident fund, then whatever contribution has made by this employer to the statutory provident fund on behalf of this employee, it will not form part of the employee's salary. I hope this is quite clear. Similarly, if the employee makes a contribution to this recognized provident fund, whatever contribution has been made by this employer to this recognized provident fund on behalf of the employee, it will not form part of the salary, but up to 12% of the salary. About 12% of the salary, it will be considered in the computation of the income from salary. But if the employer is making a contribution to an unrecognized provident fund, then whatever contribution has been done by this employer to this unrecognized provident fund on behalf of the employee, it will not form part of the employee's salary. I hope this is quite clear. So let's move to point number 3 under particulars. It is talking about interest on employer's contribution. So what is this interest on employer's contribution? Basically, the employer has contributed something to the provident fund, and on this provident fund, the employee, okay, the employee will receive some interest. Okay, so how such interest income of such provident fund will be treated in the hands of the assessee, that is the employee. Okay, we will study it over here in this part. Okay, so if an interest on the employer's contribution has been received by the employee, okay, on the employer's provident fund contribution, okay, then whatever interest amount has been received by this employee, it will not form part of the employee's salary. Okay, I hope this is quite clear to you all. But if the interest on the employer's contribution, which the employer has made the contribution to the recognized provident fund, whatever interest has been received by the employee on such recognized provident fund, it will not form part of the salary of the employee up to 9.5% of the rate of interest. Above that, that means above 9.5% rate of interest, it will form part of the salary. So in order to understand this, we need to take a blank page. So understand it over here. Okay, if Mr. A is our employee and Reliance Industries Limited is our employer. Okay, they both contribute to recognized provident fund, and the recognized provident fund is paying an interest of 12%. Okay, so the interest income on employer's contribution. Okay, so for example, understand the contribution is made of 1 lakh. Okay, and on this 1 lakh, interest is paid at the rate 12%, so which will be equal to 12,000. Okay, but there is an exemption, that means interest up to 9.5% on employer's contribution will not form part of the salary. So 1 lakh into 9.5%, which is 1 lakh into 9.5%, which is equal to 9,500. So the difference of this two, okay, which is 12,000 minus 9,500 is equal to 2,500. This 2,500 will be taken into the income from salary for computation of income from salary. I hope this is quite clear to you all. So let's come back to our format book. So that is what it is given over here. If an interest on the employer's contribution and such interest is received on the statutory provident fund, then whatever interest amount has been received by the employee, it will not form part of the employee's salary. Similarly, if an interest income of the employer's contribution on recognized provident fund has been received by the employer, such interest will not form part of the employee's salary up to 9.5% of the rate of interest. Above that, then it will form part of the salary. I hope this is quite clear. But if the interest income is earned by the employee on the employer's contribution, where the employer has made a contribution to an unrecognized provident fund, then whatever interest has been received by the employee, it will not form part of the employee's salary. I hope this is quite clear to you all. So let's move on to point number 4 under particulars. It is talking about lump sum. Lump sum simply means received on maturity along with interest income. Okay, so basically there are kinds of statutory provident funds. They may give the interest and they may give the maturity amount differently, that is separately. Okay, but there are some statutory provident fund who gives interest as well as the maturity amount together. So how it will be taxable? So if a lump sum amount has been received on maturity along with the interest income, then whatever amount has been received by the employee, okay, that is the employee's contribution plus the employer's contribution, both will be exempt under section 10 subsection 11. I hope this is quite clear. Similarly, it goes for the recognized provident fund. Okay, if a lump sum is received on maturity along with the interest, whatever amount has been received by the employee for the employee's contribution as well as for the employer's contribution, it will be exempt under section 10 subsection 12. I hope this is quite clear to you all. Okay, and for the last case, that is if the lump sum is received on maturity along with the interest income on this unrecognized provident fund, we need to refer the note. So what does this note says? If lump sum plus interest is received on the employer's contribution, then it is taxable under the head income from salary. I hope this is quite clear. So this lump sum, this note, okay, so that's why this note's reference is given over here. If lump sum plus interest is received on the employer's contribution, then taxable under the head income from salary, because in provident fund two peoples are contributing. Who two peoples are contributing? Employee and as well as employer. Okay, and in note number 2, what does it says? If a lump sum is received on the employee's contribution, then it is fully exempt. Okay, it is exempt from tax. That means it will not be taken into the computation of the income from salary. I hope this is quite clear to you all. Point number 3, that is note number 3, is talking about interest received on the employee's contribution. How it will be taxable? It will be taxable under the head income from other sources. Okay, it will be taxable under which head? Under the head income from other sources. I hope this is quite clear to you all. So let's revise this working note number 10. Okay, working note number 10 is about provident fund employer's contribution. Okay, so if an employee contributes to a statutory provident fund, it is allowed as deduction under section 80C. Similarly, if an employee makes a contribution to a recognized provident fund, so whatever amount has been contributed by this employee, it will be allowed as deduction under section 80C, but there is a limit of, okay, the limit is given under section 80C as well as under section 80CCE. I hope this is quite clear. But if an employee makes a contribution to an unrecognized provident fund, then no deduction will be available under section 80C. Okay, but In point number 2, if an employer is making a contribution to a statutory provident fund, then whatever contribution has been made by this employer, it will not form part of the salary of the employee. Okay. But if the employer is making a contribution to a recognized provident fund, okay, then such employer's contribution will not form part of the employee's salary up to 12% of the salary. Okay, about 12% of the salary, it will form part of the employee's salary, and it will be considered in the computation of income from salary. I hope this is quite clear to you all. Similarly, if an employer makes a contribution to an unrecognized provident fund, then whatever contribution has been made by the employer will not form part of the employee's salary. I hope this is quite clear. Interest income on the employer's contribution, it will not form part of the employee's salary when such interest is received from a statutory provident fund. Similarly, if an interest on employer's contribution has been received from an unrecognized provident fund, such interest on such employer's contribution will not form part of the employee's salary. I hope this is quite clear. If the employee receives interest on the employer's contribution and such employer has contributed to the recognized provident fund, then the interest on such employer's contribution will not form part of the employee's salary up to 9.5% rate of interest. Above that, it will be taxable. That means it will be taken into the computation of the income from salary. I hope this is quite clear. Similarly, in point number 4, if the assessee receives a lump sum from this statutory provident fund or from this recognized provident fund, then whatever amount has been received on maturity along with the interest, it will be exempt under section 10 subsection 11 in case of statutory provident fund, but in case of recognized provident fund, it will be exempt under section 10 subsection 12. But in case where the lump sum is received on the maturity and along with such lump sum amount the interest is received, and such lump sum amount is received from the unrecognized provident fund, then we need to refer the note. The note says that if the lump sum plus interest is received on the employer's contribution part, then whatever amount has been received by the employee on this employer's contribution part, it will be taxable under the head income from salary. That means whatever amount of lump sum has been received, it will be considered in the computation of the income from salary. Point 2, that is note number 2, says that lump sum received on the employee's contribution will be fully exempt. But if the interest is received on the employee's contribution, it will be taxable under the head income from salary. I hope this is quite clear. So now our working note number 10 comes to an end. Okay, so let's come to our main format. Okay, that is computation of income from salary. So our computation of income from salary, this much part, that is up to gross salary part, has been complete. So let's understand deduction under section 16. Deduction under section 16 is divided into 3 subsections, that is under section 16 subsection 1a, under section 16 subsection 2, under section 16 subsection 3. So let's understand our first subsection, that is 1a. So if an assessee is earning a gross salary, whatever the gross salary that assessee is earning, he will get a standard deduction up to rupees 50,000. That means, for example, if the gross salary of the assessee is say rupees 40,000, then the standard deduction under section 16 subsection 1a will be available up to rupees 40,000. Okay, but if the gross salary of the assessee is say rupees 30,000, okay, then the standard deduction under section 16 subsection 1a will be available up to rupees 30,000 only. But if the gross salary of the assessee is say rupees 1 lakh, okay, then the standard deduction under section 16 subsection 1a will be available for the entire 50,000. I hope this is quite clear. So this standard deduction is available up to rupees 50,000 depending upon the gross salary. I hope this is quite clear to you all. So now let's understand deduction under section 16 subsection 2. Deduction under section 16 subsection 2 is available on entertainment allowances and only to the government employee in this following manner, that is amount actually received 1/5 of the basic salary or rupees 5,000 per annum. Okay, so if you remember, we have studied this entertainment allowances in working note number 1 under allowances, and that also under fully taxable allowances under point D, that is entertainment allowances. Okay, I hope you all remember that. Okay, so if an assessee has received an entertainment allowances, we will consider it in this allowances. Okay, and it will be reduced. That means the deduction will be available under section 6. The deduction will be available under section 16 subsection 2, but such deduction will be available only to the government employee as per this formula, that is amount received 1/5 of the basic salary, that means this basic salary, or 5,000 per annum, whichever will be lower will be taken into the outer column. Okay, so now let's understand deduction under section 16 subsection 3. So we have already studied this. Let's revise this. Deduction under section 16 subsection 3 will be available if an assessee pays an professional tax, or if the employer pays the professional tax, then a deduction of rupees 2500 maximum can be allowed under section 16 subsection 3. I hope this is quite clear. And finally, we will calculate income from salary, and this income from salary will be taken into the total income of the assessee, and on this total income tax will be calculated. I hope this is quite clear. And our theory part, that is income from salaries theory part, comes to an end.